Awesome. Okay, cool. So why don't we get started here? Actually, there's one more insight as well. Actually, I think this is one algorithm that we should try to build at some point. I met a few people that were making just like incredible returns in their trading algorithms. A lot of people are like pretty much everyone who's making trading algorithms was talking about like really crazy returns, which to me actually doesn't sound surprising. But it was interesting learning the different ways that people do this. And one way that people were actually making some very substantial returns. This one guy told me he's making 35% a month with his trading algorithm, not per year, per month. Okay, which is insane if you do the math on that. Was that like, 1,000% a year or something crazy like that? Um, and the way he said that he was doing it was they were doing market making for DeFi exchanges. So for those of you that don't know what that is, crypto exchanges, they can be either like regular exchanges or it could be DeFi exchanges. So Coinbase is an example of a regular crypto exchange, or there's Binance, there's all those different ones. But there's also ones like Uniswap and Pancake Swap and a few other ones that are like quite large. And basically the way their exchanges work are very, very different. So, um, first of all, it's not based off of order books. It's based on like this thing called liquidity pools. It's kind of complicated to explain, but it actually makes it pretty easy to be able to do arbitrage type things with it, right? And then also they were doing this with very small coins, and these small crypto coins, they can move like 1,000% in a day sometimes, right? And if you're just market making around it, you're just selling, you're not holding a position anywhere, you're just trading it. It seems like you can make some pretty heavy cash. I mean, 35%, 35% a month sounds pretty ridiculous to me. But if you guys are ever interested in trying something like that out, we can talk about it. It's not a simple thing to do. It's definitely quite a bit of work to build something like that, because we don't currently connect any DeFi exchanges, and there's like a bunch of like new things we'd have to do for that. But I don't know about you guys, but 35% a month sounds extremely appealing to me. So I'm actually going to get him on a phone call, and I want to kind of learn a little bit more about what they're doing, and see if there's some way that we could work together, or do what they're doing in some ways. But yeah, either way, very, very cool stuff. A lot of learnings from Florida.
Yeah, no, that would be great. I'm interested in setting that up. I don't know if it's as more and more people come in, the returns are going to get tighter and tighter, right?
Hmm.
But if there's a possibility, it's a great it's a great way to be kind of like a market maker. It's a
Yep.
diversified strategy.
Yep. Yeah, it's
So
exactly what it is. It's market making, and it seems like they're getting very stable returns. It's not like 35% a month and then it moves around a lot. It's like very, very stable. So
yeah,
it's a different kind of strategy. Yeah.
could we? Yeah, definitely. And then we just have to figure out where, like you said, different places. So are we gonna go to like a sushi swap or a pancake swap place, or are we gonna create our own? What are we doing? What are
Definitely not
your
create our
suggestions?
own. Create our own would be a tremendous amount of work. But yeah, we'd link up to one of those exchanges. Yeah. So
Okay. So would
just
we get like coins from one place, find the best prices and just kind of market make? How are we gonna do it?
yeah, I'm not entirely sure how this thing works. Exactly. That's kind of why I want to get on a phone call to learn a little bit more details about what they're doing. But see that deeper Python. I just want to see here if we have. Let me switch back to Google. This is how we connect all of our different crypto brokers. So if we have any of these DeFi exchanges in here, it makes it very easy to do that. Let me see if we have anything here. Do we have Sushi Swap or Pancake Swap? Searching through here, swap. Yeah, I don't know. I don't know if CCXT connects to these DeFi brokerages. So if they don't do that, then we would have to add a broker, which is quite a bit of work. But I
Okay.
mean, for 35% a month, I mean, like it's kind of worth the work potentially, you know. But yeah, I don't know exactly what they're doing. I need to get on a phone call with the guy, and I kind of want to pick his brain a little bit.
Okay.
Maybe we could
So
even partner up with them or something, but
yeah, if there's a way, if we could all talk about that, because that's like you said, big stable returns. I have a way through the broker that aggregates it from other exchanges, so I get the best price on the major coins, but not the smaller ones, right? They can always add smaller ones if they think there's. But yeah, let's talk about that strategy. Definitely, let's dive into that. It's definitely, I think, a great thing. Okay, yeah. So just yeah, keep us in the loop with that, Rob, if you
yeah,
could, and then
absolutely.
like
I'll definitely do that.
just let me know and then what exchanges you're looking at and the strategy, then I can maybe talk to the broker, see if we get better pricing from them and create that market maker thing. And even a 10% a month return, stable return would be great.
Absolutely. Yeah, definitely.
Yeah.
Agree with that.
Okay.
So
Perfect.
if you guys are interested, I mean, you guys have more eyes than I do. But here's the link to CCXT. This is how we connect all of our crypto brokers. And if any of these are DeFi brokers, then we can work with them, right? That makes it just super easy for us to do this, right? Um, if they're not in this list, then it's much more work. Um, but we can still do it. It's just more work involved. But again, either way, if we're making that kind of cash, then I think there's a lot of value in doing that, right? You
Can
know,
you post that link? Oh, you got it. Okay,
yep, I
good.
put it inside the chat.
Okay. Well, I work with like kind of, a broker, but what they're doing is aggregating, getting the best price. And then, like you said, if we can somehow create that liquidity, right?
Yeah.
If you, I just need to know what strategy we're doing, right? So we're taking it from one side and right? Are we market making it, finding the best prices and rematching it, or what are we doing? Are we just
Yeah, that's a very good question. I'm not
yeah?
sure. That's
Okay,
why I want to I haven't had a chance to like fully decompress from this trip. I just flew in. Like I landed at like 1 o'clock in the morning. So I haven't really had
okay,
a chance to like fully come back to work mode. But I'm gonna set up a phone call with these guys, find out specifically what they're doing, and then hopefully we can kind of go from there. But the way
okay,
that he made it sound to me, he wouldn't tell me like too much detail, or at least we didn't have time to get into it. But as my understanding is that they're doing market making and they're basically just placing like bid and ask orders or something along those lines, right? So that
okay,
to me almost sounds like a Bollinger based type strategy or where they're looking at the order books or something along those lines. I'm not entirely sure, but
okay,
but I will get on a call with them and I will try to get more information out of them. I
okay,
think that's very interesting.
okay, perfect.
Yeah. But let me know if any of these exchanges in here in this list are DeFi exchanges, then we can definitely work with them. It's actually quite easy for us to add them in. So then we could like try this out even next week. You know what I mean? But we need to first get a connection to a DeFi broker. That's step one. And if one of these is a DeFi broker, then that's an easy way to make it work.
So
I'm not
you
seeing
you
kind of the
you want
usual
to
stuff.
work with a traditional type brokerage, right? You want a DeFi broker, right?
Yeah, that's specifically what they're talking about, that they're using
Okay,
DeFi brokers to do this. So I
okay,
don't know if there's something special about the DeFi broker, right? Is it the way that they're doing liquidity pools or the fact that there's a lot of coins? I don't know, but I think there's a lot that we can do there.
okay,
If it's just to do with their small coins, then we could use something like Gate.io, for example.
yeah,
These guys have a lot of different coins, and they'll have the smaller coins before they go on to bigger exchanges, right? So if you can find a project that basically gets listed on Gate.io, is doing well, has a growth rate to it, that yada yada yada, then you could potentially make a crazy amount of money on this too. So we do have a bunch of really interesting exchanges on here, right? Like Gate.io is one that I'm specifically thinking about right now. But but yeah, it'd be interesting to see if, or if you guys know if any of these are DeFi exchanges, because that seemed to be the kind of key thing there, is the fact that they're a DeFi exchange.
Okay.
Well, the comment on on the on the about there's a thing called CCDXT,
Okay.
um, and that's their comment about CCXT, which is
Hmm.
that CCXT is only centralized exchanges.
Wow.
And so apparently this is a cryptocurrency decentralized exchange library. But actually the link I pasted was CCXT. I think I mentioned DeFi because they were talking about a thing called DeepCoin that they want to add to CCXT because they were saying they do DeFi exchanges.
Hmm.
But all these exchanges right now that, with Know Your Customer and all the rest, these Kraken and Gemini and all the rest, these are all centralized. Um, because the thing about a DeFi exchange is, well, you can run your own. You just fire up your own node, get some staking tokens, and go.
Right.
The I think one of the interesting new coins is SUI, SUI, and they become a top 10. They launched last year. It's a fork off of Meta's thing, and
Okay.
so there's a crazy amount of VC money going into uh, crypto Web3 right now, based on gaming applications. Obviously, everything else is moving too, but there's um, been a huge shift over the last year, and there's Andreessen Horowitz and all the VC guys. They're literally pouring in tens of millions every week now. So there are opportunities, but it's a very complicated space.
Yeah, for sure. Okay. So let me see here. You said CCDXT?
I see a
CCD.
couple of YouTube tutorials, how to program your own DeFi server.
Yeah, we don't want to make our own DeFi server. We want to connect to the ones that exchange that
Oh, good,
exist.
much better.
Yeah. So that's a whole different ball game.
Well, I
Yeah.
think when the people are talking about market making, I think they're talking about running DeFi exchange nodes, right? You need to, because what you need to run because you can check the code's open source, right? You can just go check it out, but to run it, you have to stake it, and that's the liquidity you're providing is to be able to run a DeFi exchange. You need to capitalize on it. That's where the returns come from. Is you get an exchange fee when people are running across your exchange. So you are an exchange in the DeFi
Yeah.
world. That's what they're talking about.
Yeah, I
And
don't know
then
if that's what they're doing, but
Well,
and I know you get a percentage. So say you go to like Sushi Swap or something. Sushi Swap gets a certain percentage, and then you take also a certain percentage, right? So say they get like 10% of how much you stake and what's transacted, and then you get the remaining. Am I
yeah,
correct?
yeah,
Right?
and you can into no, so the other side of this is you can just stake into a DeFi exchange, right?
Exactly. Yeah.
Um, so yeah, that doesn't entail running anything. That just means going out sourcing which DeFi exchange you want to put your money in.
okay.
Swap some of your fiat for whichever token they're using, and they're all people, because that's all proof of stake stuff, right? So you look at people's history. If they've been slashed, you don't want to give them your money, your tokens, and you look at people who are doing well, and you just yeah, they're always looking for more capital.
Well, let me this is one person I met that was doing this. Nick Fiaschetti. He actually runs Fiaschetti LinkedIn. He runs a hedge fund. Let's see if this is from Florida. I think this is him. So these guys weren't doing as well. In the know capital. Yeah, they're based out of Puerto Rico. It's a hedge fund out of Puerto Rico for legal reasons. Crypto investment fund. These guys, they're saying that they're making 3% a month. Actually, or at least they said they'd give 3% a month to investors. I don't know if they're making more than that. But they're saying 3% a month to investor, and then they'd pay a bunch of money more. I got the sense that they're probably making like 5 to 10% a month, these guys, and they're doing something very similar. I don't know if they have who's in the know capital. Yeah, it doesn't really say much about their strategy here. Apply to partner. Yeah. Yeah, they don't really want to tell too much. I don't know if one of you guys want to give him a call, maybe
Okay.
he'll tell you guys a little bit more. I kind of told like we're debating to like do a partnership, the two of us. So I spoke to him yesterday on a phone call. But if you guys want to give him a call, find out kind of like what they're up to, I think that'd be pretty interesting.
Okay.
Cool.
So you could, like I said, you could just, I guess, just stake it with like a sushi swap. The real risk that I think you're taking is, say you buy Bitcoin and you're doing a pair, right? So Bitcoin and some other coin, right? And you're market making. The only risk you have is if Bitcoin goes down. Yes, you're making it's like you're making. Think of it as like a rental. I guess like a rental, right? You hold the coin, you're kind of handling those transactions, but if Bitcoin goes down, you're making rent of like say $100 or $1,000 a month, but the property could go down, right? So that's the risk play there. Of course, when the market is zooming up, right? You're making money, you're making fees, right? Right?
I don't think that's what they're
You're
doing
collecting rent.
because these guys
So
they're making money in bear markets too.
okay.
Yeah, I
So they're
mean,
doing well.
exchanges like brokers, they make money on both sides of the trade. They don't
Mhm.
care.
Mm-hmm.
But the point about, so the relevance of Bitcoin here is Bitcoin dominance is going up, right? All the altcoins are headed down and will be for quite a while. But if you're generating income and you're taking profits as you see fit, the relative value doesn't necessarily have to be that important. But yeah, holding altcoins right now is definitely a losing proposition.
So, my question is the risk. There has to be a risk somewhere, right?
Well,
So
don't
the
do this
risk,
in the US. That's my policy, personal policy.
no,
Although
but
the two lawyers for SEC just resigned over their getting sanctioned or getting blasted by the court for falsely suing the guys on that crypto case. So, but it's still a bad environment in the U.S.
but the question I have is, where's the true risk? So is the true risk holding the coin? There has to be a risk somewhere, right?
Well, we don't know what the strategy is, so it's hard to
Okay.
assess what the risk is.
Well, the thing is, in the U.S., you run the risk of going to federal prison if you're participating in anything crypto, period, whether you're doing anything illegal or not. That's kind of a problem.
There's details to that,
Yes,
but
right.
yeah, I mean that's why these guys have a fund in Puerto Rico, right? Like that's why, they're based out of there, makes it a little bit easier for them. But
If you're
there's a
physically
lot of
present in
details
the
to it. Like
U.S.,
if
that
you're
doesn't
doing
help
this,
much.
no, but like it's not that just anything crypto you do is illegal. Like there's a lot of details. So like if you're doing this for institutional capital, they have a hedge fund, they take $250,000. It's the smallest investment that they take, for example. And when you're dealing with that, like when you have accredited investors or even institutions investing in you, it doesn't matter what you do. You could do anything you want pretty much in crypto. The problem comes when you sell to retail investors. That's the issue. Not
No, that's not the history in the U.S., right? Under Gensler, they have been without legal authority or constitutional authority. They have taken people, they've wrecked businesses, they have been to courts, they've lied in court.
yeah, but
So
for
the risk in the
specifically what
U.S.,
though?
anything
Like
because they
most
want
of
to
the
shut
court
down
cases I've seen have been with have had retail investors involved. It's not, B2B transactions. I haven't seen anything like that where they're selling to corporations and there's a problem. It's all when retail is involved. It's a very different thing. Like if you want to run your own investment fund, or if you want to invest in crypto yourself, they're not going to put you in jail for that. I mean, but if you sell that to retail investors, then yes, you can get in a lot of trouble for that. There's details to it.
So, well,
Like if you started using Binance and if you went through like a VPN or something, you're not going to get in criminal trouble because of that. Binance would. You won't though. You'll be fine.
But if you're selling crypto without a money transmitter's license,
Yes.
could be in some serious hot water.
Yes. Absolutely. Yeah. Again, to retail investors, right? That's like MTL licenses are very hard to get. We had to go through that with the Voyagers. It took many, many months and many millions of dollars for us to get all MTLs across America because you do it by state. But yeah, that's kind of the main risk that they talk about is, they don't want like money laundering involved. They don't want like criminal activity involved, and they don't want you to rip off retail customers. So that's kind of the whole thing there. So that's more on you being a business that's selling to these companies, Yeah. Okay. Either way, anyways, it's a lot talking about that. I want to get on a phone call with actually if you guys want to talk to those guys, you could tell them we sent you. What was the name of it? In the Know Capital. If you're interested, you tell them we sent you their way. If you want to kind of get to know what they do and that sort of thing. And then there's another company that I met that does something very similar, or at least sounded similar. Maybe it's a very different strategy. I'm not sure, but those guys were the ones. These guys, the In the Know Capital, he was telling me like 3 or 4% or 5% they're making per month, whereas this other guy was talking about making 35% a month, which is a substantially different number. So I'm not sure what exactly they're doing and all that, but yeah. Yeah. Alan says left crypto 2 years ago as a playground of organized crime and North Korea. It is definitely I mean, it was founded on crime. I mean, like the first use case for Bitcoin was literally like drugs, prostitution, and like murder for hire. That was like the first use case for Bitcoin. Nowadays it's a little different. But I think people forget that like literally the reason why Bitcoin became popular in the first place was to send money illegally to people. If
Hi
you
there,
wanted to
this is
buy
Nathan.
like a kilo of cocaine off the dark web, like you would do that using Bitcoin.
Can you guys hear me?
Yep, I can hear you.
Yeah, so crypto was originally used to move assets from China out of China. Okay, that is how they used crypto.
Yep.
So they could move assets because China would not allow the export of their currency. Okay, and so they created crypto to do that. And I'm just letting you guys know, I got out of crypto 2 years ago. Yes, I still have a little bit of Bitcoin, but I'm like, fuck Bitcoin. I just don't care about it. It's not real money. I don't want to support organized crime. I don't want to support the drug world or murder for hire or
But all of those things are done on fiat.
By North Korea. I was hacked by North Korea for my Bitcoin.
Yeah, but
I am done
all
with
of those
that
things,
crap.
all those things are done. There's way more of that done with US dollar than any other currency.
Sure, that's fine. But the US currency is a real currency and it is driven by the world. Okay.
And Bitcoin will have value when the US dollar doesn't.
Yeah. You talk to me in 100 years when Bitcoin's a real fucking currency. I'm sorry. Bitcoin is what it is. And if you want to be a conspiracy theorist and say Bitcoin's the future, great. But seriously, give your head a shake and realize that organized crime is using Bitcoin for its own purposes. Okay.
And it's
my wife is
way
not using
different
Bitcoin
than any currency in that regard.
Yeah, that's right. But my wife is not using Bitcoin. The cost per transaction is outrageous for Bitcoin. It is not a daily transaction for Bitcoin. You can't use it to buy coffee. Give your head a shake. It is used for organized crime. Okay, it is a giant Ponzi scheme. And if you have
So
any education in economics,
MicroStrategy is the largest, was it the first or second largest Bitcoin holder? What are they using it for?
I have no clue, but I can tell you that in the world
Well, I
of
can tell you,
economics,
so
that
it's a whole point. It's a
coin
company that
is
succeeded because they've seen the future, which is they put their treasury, the largest Bitcoin
it's a
holder, is a
giant
US
Ponzi scheme.
corporation called
Bitcoin is
MicroStrategy,
a Ponzi scheme.
who looked into the future and understood that Bitcoin will be around here after all your rest of your currencies
That
are
could be,
inflated to
that could
nothing.
be, sure, sure. But Bitcoin, you have to understand, is a Ponzi scheme.
All currencies are.
Okay, that may be, but the US government backs the US dollar. Okay.
And they promised that you could get gold for it. And then, oops,
No,
not anymore.
we moved off the gold standard in like 1973.
I know,
all
I cited the date because
Okay, that doesn't matter.
that's the day it
Point
became
is
a crypto.
that the
That is the day it became a
Bitcoin,
Ponzi scheme.
if you want to be involved in Bitcoin, I'm sorry, Rob, I'll end it here. But I know that North Korea and the Russian government are actively hacking people's accounts for Bitcoin to drive their nuclear programs. And if you want to be a supporter of that, great. But if you want to make actual dollars, let's have a real conversation. Okay? I'm sorry, I'm not here to be an affront to anybody. I'm just a guest tonight. But like, Bitcoin is not the future.
There's
Thank
definitely
you.
some very
That's all I'm
strong
saying.
opinions on this. That is for damn sure.
Okay.
Yeah. I mean, I agree with you. It's definitely used a lot for criminal activities. 100% agree with that. That's pretty hard to deny. But whether it's a real currency and whether it's going to do well in the future, who knows? I mean, I guess that's anyone's guess. I personally, I've been making lots of money just trading it. So, that's a separate thing. I don't really give a crap whether it's used as a real currency or not, personally. Um, but that's a different story. Either way. Do you guys want to get started with kind of the main part of class today?
Sure, absolutely. Yes, please.
Yeah, some very strong opinions here.
Yeah, well, I did give my last word, which I dropped a link. If you want to see who the world's smartest investors are, you can go look at the largest corporate holders of Bitcoin. So let's move on. Yes.
Yeah, awesome. Okay. Next topic. Okay, cool. So we have a bunch of people here that are not normally part of our class. So welcome to all of you that are not normally part of this. This is our live algo building sessions. Kind of not it's kind of a typical class. We'll talk about different strategies that we want to do. Here's basically what happens during these classes. We do this every single week, and we kind of go through 5 steps. All right. We'll talk about trading ideas and presentations, which is kind of what we're starting to go through right now. Talk about different trading ideas and how can we make money in different ways. Crypto is not usually what we spend time on. We've been spending more time on AI and options. To be quite honest, we don't spend as much time doing crypto, so that's a bit unusual. But that doesn't mean that we can't make money doing it. So I'm all for it. Whether you guys believe it's a real currency or not, or whatever. Honestly, personally, I agree with some of your points, Alan. Honestly, by the same token, if we could build an algorithm that makes US dollars, that's that's very different. That's cool. I'm glad you're here, Alan. But okay, so what we'll usually do during this class on Tuesdays is we'll go through 5 steps. Like I said, first thing is we talk about trading ideas. People present their different ideas. What do we want to build today? What do we want to work on today? You witnessed a little bit of that where we're talking about building, the strategy for DeFi. We'll also talk a little bit about our option strategies that we've done, and if anyone else has any ideas, I kind of want to update you guys on some of our strategies. I don't know if you've been watching them, but they're doing really freaking well. Especially the one that we worked on last week is really, really kicking ass. We'll talk about that in a second, though. Once we talk about our trading ideas, The next thing we do is we vote on what ideas we want to build. So you guys all have a chance to vote. This is all democratic, right? It's not up to me. It's up to you guys what you want to work on. Then we'll actually build the algorithm. I'm going to be building this algorithm during this class. I think in the future, we're going to expand this out, actually have more of these classes. As we get more subscribers, we'll be able to have more than 1 day a week doing this, and we can, generate more and more trading algorithms. Number 4, we'll tweak the algorithm, right? So once we build it out, we'll tweak it and try to improve it. And then you guys will get a chance to get and run the code, right? And this is really kind of the value out of it. We'll build some algorithm, makes a bunch of money, get some good backtesting results. You can take those algorithms and you can run them yourselves, right? So this is you can think about today's class, like the Tuesday class, as an idea generation mechanism and a way for us to constantly innovate and create new types of algorithms. All right, so once again, that's we'll talk about trading idea presentations. We'll continue this in a little bit, and we'll kind of get the rest of the ideas out, and you guys can have an idea as to what the options are to work on today, and everyone can make their pitch, right? Then number 2, we'll vote, right? You guys will get a chance to vote on what we want to work on. Then we'll actually build the algorithm itself during the class. So you'll see the act of building, and there's, first of all, you can be involved in the process of creating algorithms. But then also, if you're looking to learn how to create algorithms, you can kind of see what that's being done like and all that sort of thing. Then we'll tweak it. Usually once we finish building an algorithm, that's not the end of it. We'll want to tweak it. Like, what if we change this parameter, and what if we change this? And, kind of look at the backtesting results and go through that way. And then last but not least, you guys will be able to access that code and use it and run it yourselves. All right. Okay. If you want to be involved in this, this is our current pricing. I think we're going to be raising our prices soon. One thing I definitely learned from being in this conference in Florida is there's a ton of demand for this stuff. I think we need to raise our prices a bit. So we'll be doing that in a bit. For those of you that already signed up, you keep legacy prices. For those of you that have been around for a while, you get to keep what you were paying. We don't charge you more, but for future signups, that price will be going up, right? And here's kind of 2 plans that you can get that include this live algo building session. First one is the Pro plan, which includes this live algo building session, and importantly, you get all the code that we talk about today. If you're just showing up here today, you'll be able to see what we're doing, but you don't get access to the code. If you sign up to a Pro plan, you'll actually be able to use this code and run it. Then you'll also get access to our strategy library, the Pro version, right? I recognize a couple of you guys in here that are starter plan subscribers. The Pro version of our strategy library is significantly better, almost to the point that I'm really starting to think about how do we communicate that better, because people that sign up to our starter plan, you don't really get the benefit of our strategies, to be quite honest with you. The Pro plan is where we actually have strategies that have, impressive results and all that sort of thing. The starter plan is kind of pretty basic. Next of all, you're also going to get access to our workshops. We have workshops on a regular basis. For example, we had a workshop last month on how to run our butterfly algorithm. And we constantly have new workshops every single month on different topics. And actually, if you guys have any ideas what you want to do, please let me know. We can always do workshops on anything that you guys are thinking about. You get access to our trading signals. You also get our Discord community. You get our Python for Finance course, and you get access to our algo trading course. You get all of that in the Pro plan. In the All Access plan, which is $7.99 a month, you'll get everything in the Pro plan that I just described. But then also you get access to all of our course recordings. We have lots of courses on things like options trading, AI, blockchain, all that kind of stuff. You'll get that. You'll also get a lot of one-on-one hours per week, per month. So if you want some extra help with building stuff, think of this as like a white glove service. We will, modify things for you, create things for you. We'll spend a lot more time, and you get full service. So if you want us to basically set everything up for you and build things for you, we can do all that. Okay, cool. So those are our plans. Let me know if you have any questions. If you do not have any questions, then we can get started with step number 1, or continue with step number 1. Okay. All right. So we talked about this one crypto idea, trading crypto DeFi. Yeah, it's no problem, Alan. That's no problem. Honestly, I've found that a lot of people have very strong opinions about crypto. It sounds like you actually went through some sort of scam situation, so I can understand why you're so heated. I've known a lot of people that have gotten scammed because of crypto, so that doesn't surprise me at all. My mom got scammed a while back. They got her to deposit like $5,000 and send her across the world, and it's a whole thing that we had to go through. Basically, they told someone called from maybe Korea. You might be actually right about that. Convinced my mother that I was in jail and that she had to send $5,000 worth of Bitcoin to get me out of jail. Um, we have since spoken to my mother and taught her to not fall for things like that anymore. But that was unfortunate. The same thing happened to my brother-in-law. Different kind of situation. It was some girl reached out to him on Facebook and basically said, we want to or she was saying like, oh, basically pretending that she liked him and wanted to date him and all that kind of thing. And then started talking about crypto and got him to give his money to a place that was supposedly out of Australia, but didn't actually have a license on MetaTrader 4, which I've heard has gone banned in the US, by the way. That's actually interesting. But he lost a bunch of money in crypto as well. So I can completely understand. And you're saying here your wife got hacked by North Korean and you had all your Bitcoin stolen. Not surprising. Again, like this stuff happens all the time with crypto. So I'm not surprised whatsoever. I definitely agree with you that there's at the very least needs to have some sort of regulation and some sort of better security protocols in crypto. That much I very much agree with. Whether crypto should exist in the future or not, that's debatable. There's a lot of details to that. But yeah, I can completely understand your reservations there, Alan, because I've seen that happen way too often. And yeah, I can completely understand where you're coming from.
Well, the one
Yeah.
with the we had here in the Midwest, we had a story. I don't know if it's nationwide or not, but where they were calling and saying, "Hey, your relatives in jail or whatever, you need this." Well, it was actually they did voice modification, so it actually sounded like the
Jesus.
mother or
Wow.
whatever was in jail, and she was the actual one talking. And they said it sounded just like my nephew or my dad or whatever, because the software was so tuned that they were able to translate it and mutate it. And it was just, she swears up and down, that's why I sent the money, because it was my son actually calling from jail, blah, blah, blah. And so, because it sounded, the
That's
voice
crazy.
alteration was just amazing. I think it was last summer we had that going around. It was weird.
Yeah.
Yeah, you
They're
can
getting
dupe a
really
voice.
sophisticated. Yeah.
Yeah, you only need a few seconds of a sample to dupe a voice.
Yeah, it's a crazy.
And
It's wild.
yeah,
Yeah.
and that same scam you're talking about with your mom, Robert, is the one that that Ohio guy shot the Uber driver lady.
Really.
Yeah.
Jesus, that's crazy. Yeah. So definitely a lot of scams going on. Crypto is definitely very much used for criminal activity. So I very much agree with that.
But the good
Um,
news is it will not be going away because the whole point of Web3 is it serves the interests of the non-powerful. And so even if however many governments ban it, it will work for the rest of the world.
yeah, I think it's pretty hard to get rid of. It's kind of like trying to get rid of Napster. You know what I mean? Like BitTorrent or Napster or that sort of thing. It's like you can't really get rid of it. Like it's pretty hard to get rid of this stuff. They could try, I'm sure, but what I think is better regulations need to happen. That's personally what I think, and not regulations in the sense of let's kick all the exchanges out. Um, but there's definitely a lot of regulations that need to happen around crypto. I very much agree with that. And yeah, you're that's scary that they're able to do that. Sound like a person. I actually had to sit my mother down and actually we're probably when we go to New York, I'm gonna have the same conversation with my wife's parents to let them know that this is possible. They could actually like fake you even in videos now, right? Like I don't know if you guys have seen this new AI technology where you can basically impersonate people in videos. I did it. I had like an AI version of myself was kind of scary. It was not perfect, but when I showed it to my mom, she was like, she thought it was me. You know what I mean? Like she's like, "What do you mean you recorded yourself?" I'm like, "No, that's not me." Like that's an AI version of myself. So I think definitely education around that is very important because scammers are going to go out there and do all sorts of things, and crypto is definitely the number one way to move money in a scam. So very much agree with that.
Yeah. So yeah, you can't believe your lion eyes no more.
Yeah, definitely.
Warriors.
Yeah, yeah, definitely. Okay, so we talked about that one trading idea of doing DeFi. I think that's a little bit more challenging because we'd have to connect to a DeFi broker. But if you guys know some easy way that we could do that, then we can go down that path. If not, then we can spend a little bit more time, and it'll take some more effort to do that to connect to a DeFi exchange. But putting it out there, this idea, I don't think it's something we could do today, but 35% a month sounds pretty damn appealing to me. Like I don't know about you guys. But there's also other strategies that we've been running for a bit that have been doing very well. This one actually just took off. Our butterfly. I realized I spoke to one of our employees, and he's been running the strategy, and he actually never had this dip that happened. So for us, we had this pretty big drop when we were running this. He did not have this. So I'm starting to think that our old code was actually better before we added in multi-leg. So I'm going to actually personally fix that up. But if you guys want, we can kind of go through that today and try to get that code fixed during today's class because he was telling me that he still continued to make money with this butterfly condor strategy. So even though this fell apart for us here, his kept doing well. And basically, it's just removing the multi-leg order. Seems like multi-leg is just not a good idea. You know, we built it out. We're talking all this stuff. Maybe it's just not the right thing to do. So that's one thing that I think would be interesting to work on, considering that his account has still been doing quite well. But another one that I think is even more interesting personally is the one that we worked on last week. I don't know if you've been keeping up to date with this strategy, but this is impressive as hell. Um, I don't know if you guys agree with, I'm sure you agree with me. It's crazy if you don't. Um, it's been about a month since we've been running this strategy. We started on March 22nd. So a day, a month, and 1 day. And since starting this thing, it is up 44.5% in a month, which is wild to me.
Wow.
Yeah, yeah. So it started with what is it? 100 and a little less than 100,000, and now it's up to 141,000 over the course of a month. And not only is it up this much, but take a look at the graph of how stable this thing is. It's basically like a steady climb going up. And notice that also during this time period, this is one of the worst weeks in the S&P 500 and the NASDAQ was around last week. The stock market crashed. So if we take a look at the stock market, let's pull that up for a second. So if we look at the SPY over the past month, this is what's happened to the SPY over the past month. This is the stock market. This is how this strategy is performed. First of all, it doesn't seem to care whether the market's up or down, which we kind of knew to begin with, but it's impressive how much it's stuck by that. Because it was my understanding that when significant events happen, things might go wrong, but that doesn't seem to be the case. And then also, we've had some pretty big drops. Like, I mean, it's not even that we're going sideways or anything. Like this is actually a pretty damn bad week. And this thing is still going up and almost in a straight line, right? So not only is it 44% in the past month, but it is up almost unwaveringly going in that straight direction. So I personally think this is a very interesting strategy. I know last week, for those of you guys that weren't here, let me tell you about kind of what we've been working on. We worked on essentially trying to make this thing work on the SPX as opposed to the SPY. And I think we need a few tweaks because the way that we back tested this is kind of a typical looking graph of it. Again, it's kind of like this straight up looking thing. This is only 12% a year. what we actually are getting in real life with the paper trading stuff. I actually want to put my real money into this, not gonna lie. I think I'm gonna do that tomorrow. Um, I wasn't able to because I was in Florida, but like after I showed this to so many people, I'm like, well, I wish I had my money in this. It's like it's up 50% in like a month. It's crazy. That would be very nice. I wouldn't mind that, you know. At some point that could just like pay, at least for me, that could like pay my salary, you know, like but okay, so we had a bunch of back tests. Here's one back test we ran, here's another back test we ran. Again, notice how stable this thing is. It's going straight up and to the right. This one had a bit of an explosion around COVID. This is a different version of it, but after that did extremely well. These are all different versions, all these different back tests that we are trying out. Here's another one that we ran is on SPX, and here's another one that we ran. So we're testing out a bunch of different things, but I can tell you this was, let me dig this up here. We had, and I don't know if you're here today. Where is it from? No, where's there it is. I don't know if you're here today, but this is the graph that we are looking at last week, where another company is essentially doing the same sort of strategy. And they went from a $40,000 account at the end of 2022. So December 30th, 2022, they started $40,000, and that grew to $170,000 a year later. So what are we talking here? From 40,000 to 170,000 divided by 40. So we saw a 525% increase. Was that 525 or is this 325% increase? Either way, very, very significant. I think 325% increase in the value of this account over the course of a year, which is better than the back test that we're seeing. So that tells me that we probably have something that we're missing that we can do to even improve this thing further. So yeah, so that's my pitch here for this martingale strategy. I think it's very interesting. I don't know if you guys agree. I mean, the returns are definitely doing pretty damn well. But yeah, so that's another one. So just to put it out there, we have 3 different strategies that we talked about. I think 2 that are actually possible today to work on. The third one, the DeFi one, I just don't think it's just too much work to get done in a single day. And we would have to do a few things as precursors to that. But the other 2, this butterfly strategy that has been doing really well for our employee. This is before those changes that included the what's it called? The multi-leg orders. And then there's also this strategy that has it's surprisingly doing a lot better than the back tests. The back tests almost don't do it justice. It seems like when we run in back tests, it's like, okay, it does well. Actually, if you guys want to see the one that you guys, if you are part of our pro plan, you actually get access to this. So for those of you that are part of a pro plan, you can check it out here. For those of you that are not, you could sign up to our pro plan and get access to this. But here's that same strategy, the Condor Martingale. The back test is quite nice looking. It does look quite straight, right? Again, seems to be quite low risk, low drawdowns, quite a high return. This is 60% a year. But again, how it's running and with paper trading so far is doing a hell of a lot better than this. We're talking about 60% a year here in the back test. That one did 45% in a month. So I think that's pretty interesting. I don't know if maybe if we back tested this the next few months, maybe it's just been the past week or 2 or month that's been really good. I'm not sure. Or if it's just our back tests maybe are just not taking the full picture into account, and maybe it's actually better than what we think it is.
Yeah, I'd really like to find out about, what is the back test situation, and if we could see if there is a discrepancy like on this recent performance, that could be a good insight.
Absolutely. Yeah, if you guys choose to vote for this, then I think that would be one major thing that we want to start with is let's back test over that time period. Let's see if it matches our back tests. And if it does not, then we could actually track and see, okay, well, this is how it actually traded. This is what the back test says. What's the discrepancy? Right. And I think we could take it from there. Because I'm starting to think that with this Condor or martingale strategy, the back tests are not taking into account something. There's something missing here. Right. I'm starting to think that. Right. And I think missing in a way that's positive to us. You know what I mean? That in reality would do even better than the back test. Or at least so far, that's what seems to be happening. So,
Hey,
yep.
so I have a question. I
Mhm.
know we had issues when we ran the options butterfly condor using real money, and the paper trading was showing different results compared to real money. And
No,
so,
no, actually, it was not. Or was it? Oh, actually, I mean, it
yeah,
always will, right? There will always
So
be some discrepancies, you know? Yeah.
yeah, the as far as the paper trades to real money, they were showing different amounts because there were different amounts in the by their account, but they were following the same exact like trajectories. Whenever one would drop, the other would drop, and if you laid their graphs over each other, they were essentially identical from the point that the one was instantiated.
That's good to know.
So I think if we can, I would personally be super interested if we could get Butterfly Condor back to where it was, because that was projecting some really enticing numbers. And knowing that at least in this instance, the paper trades kind of matched real world, I'd be interested to see if we could get back to good trading and see if that works as well. I was also similarly super curious as to what would happen if we were to, on either the Condor Martingale or the Butterfly Condor, use one of the like multiplicatively leveraged instances of SPY.
I mean, SPX.
Yeah, like the all yeah, but any of the leveraged versions of the S&P index.
Oh, do you mean like U Pro or TQQQ or something like that?
Yeah, stuff like that.
Interesting. Yeah, it'd be interesting to try that out. I think I tried that once back in the day. I don't remember what the results were. Um, that'd be very easy to test though. You know, we
yeah.
put in a
Yeah.
different symbol, we try it out. Yeah.
So going back to what I was saying, I want to see like real money using this strategy and not using paper money, because I wanted to use real money on
Mhm.
this strategy, and I was going to use real money on the butterfly condor,
Mhm.
but when I saw on your real money account where there was a divergence between the real money and the paper account, then that's when I changed it. I said I decided I want to use the options condor, but someone has to be the guinea pig to use real money. And so we can back test and use paper money all we want. But if we're not using real money, then it's just research.
Yep.
Because we're all in this to make money and not just to like
Absolutely.
play games. And so uh, I think I'm going to try using this options Condor Martingale using real money. And like right now, I'm using paper money right now. But we're all in this to make money, not just to play games. And so that's what I'm getting at.
Yeah, that makes a lot of sense. So I guess two things to what you're saying is, first of all, I don't think the problem was when we went from paper trading to real money. I think the problem was when we added in that the multi-leg orders. I think that was the issue because even paper trading went to crap. You know what I mean? And I don't know if it's that they're not being placed right, or if maybe multi-leg is just a bad idea to begin with. Maybe just fundamentally it's a bad thing to do. I'm not sure. Um, but yeah, so my thoughts are personally, for the butterfly, I'd really like to bring it back to the old code and rerun that old code and see if we get better results from that. I'd really like to see that again, once we get the paper trading back up and running. Because for a second there, I was thinking maybe he was just having a bad week. But when I spoke to my employee yesterday and he said he was running the old code and it actually was still making him money, That surprised me a little bit and really makes me think that that multi-leg was just a bug and we just broke it. You know what I mean? So that's on that first thing with Butterfly. I do not think the problem was real money. I think the problem was multi-leg, right? And second of all, I couldn't agree with you more in terms of real money. In fact, after this time that I spent in Florida, and I'm talking to people that have like really a lot of cash. To give you an example, a guy that I was talking to on Friday, he had a $2 million car collection that he was telling me about. I mean, he's like, it's $150 million worth of real estate. This is one guy that we're talking to. Another guy that I spoke to, they own 8 insurance companies and they want to like raise, $500 million or something ridiculous like that. Anyways, really large sums of capital. And, you know, these are great people to have involved, but I got to ask the same question every single time is, what is the real money implications here? Right? Because it's one thing to paper trade it, it's another thing to see it in real life, especially when it comes to options trading, right? Because there's like a delay and like a whole bunch of other stuff involved. So my goal to tell you is regardless of what we choose here today, my goal throughout this week is going to be to get this butterfly condor working in the state that it was before. Basically bring back that code, right? And we could work on that today. If you guys want to work on that, we could do that. We could do it together as a group and kind of go through that. More than happy to do that. I think it'd be very interesting. And then number two, I want to put real money behind one of the strategies right now. And I'm thinking inside this martingale strategy, I like to put some real capital behind that. I will probably, regardless of what happens here today, do that either tonight or tomorrow. So hopefully that addresses a couple of your concerns, Stacy.
Okay. Yeah,
Yeah.
so you can use real money and I can see
I'll be the guinea pig.
results. Okay. And then I'll be right behind you because
Yeah.
I want to use real money, but I don't want to use it and then I start to lose. And that's my big issue.
Of course, yeah. I couldn't agree with you more. And of course, any trading algorithm or any investment always has a chance of loss. It's impossible to get rid of that. We
Right.
can try our best to get rid of it, but there's always going to be some sort of risk involved. But I agree with you in the sense of, the more real money track record that we have, the better, right? It instills confidence and allows, at least gives you guys a more informed way of, do you want to be putting money into this or not, right? We have that with a couple of our algorithms. With our latest stuff that's having these like really insane returns, we don't have that yet. But I intend to change that dramatically over the next little bit. I've already moved over, like I said, I have like $27,000 on one account right now that I'm going to do this with. I think I'm going to run the Condor Martingale. I think that's what I'm going to run in there. So we've been getting good paper trading results. I'm just going to take that exact same code and run it. So I'm not going to make the same mistake as before, try to modify it and think that it's still going to run the same. No, just use the exact same code that we have in paper trading in real life. That's what I want to do. And then the butterfly, I'd like to remove the multi-leg. And then once it does perform in paper trading again, assuming it goes back to what it was doing, which I don't see why it wouldn't, because like everything is kind of saying the same story. Once that starts to perform well again, I'm going to move another $27,000 over to another Trader account and do the same sort of thing. So just so you know kind of where my head's at, and I think that should really help with your decisions and what you're thinking to do as well. Right?
Okay. And then a quick question about Trader. When I use Alpaca, I can see like the history of like my account, but with Trader, it's hard to see the history of your account, like going up and down. Like, because I talked to them and they said that they don't have any kind of graph where you can see like your account balance, even using the paper money, the account, it doesn't show.
Yeah, I agree with you. I think that's very bizarre that they don't have that. I couldn't agree with you more that that's very strange and should change. I actually had a conversation with some people about that over the past few days. And I think that it probably has to do with the fact that they're an API broker and they never really intended to have their own trading interface to begin with. I think that's the reason why. But I could show you one way that you can get something like that. So if you go into Tradier, where is this again? Let's switch over to paper trading because I think we actually have some trades in here. Yeah, so something actually happened in paper trading. And then if you go into your settings, data export, you could download, your activity, orders, gains, loss, and positions. That will sort of give you that. To be quite honest with you, I think it's also very stupid that they don't have a graph of this. I find that mind-blowing, actually. I've never seen a broker that doesn't have a history of your account in it. But that's what it is. But this is the closest I've been able to get to that, right? Is go into their data export, right? And actually, I don't know if you've noticed, we've been on Discord going back and forth. Like we've been sending out orders and we're trying to debug what's happening using this mechanism. So I think this is about as close as you're going to get to that from what
All
I,
right.
yeah.
Yeah, I can just take that download file and throw it inside Chat GPT and tell it to make me a graph from that.
Probably, yeah, probably. Yeah, okay. Cool. Let me read off some of the comments that you guys are putting in here. You guys wrote a lot here. Okay, I'm trying to Napster. What is the core decision of making of the strategy? Can you say? I'm not sure what you mean by that, Alan. What is the core decision making of the strategy? Can you say which strategy you're referring to? I'm not sure what you mean by that, Alan. Jim says it's a strat called, okay, I guess answer the question, called Condor, which buys options, make money whichever way. That's partially true, Jim, by the way. It's mainly sells options. It's a net negative. So it is in a way shorting options. But it's a defined risk strategy. It's both selling and buying, but at different expirations. So to give you an idea of what an iron condor looks like, for those of you that don't know options trading, this is an iron condor. Basically, you're selling one option here, you're selling another option here, and then you're buying and you're buying. So whenever this is, let's say, a stock price is how a stock price would move. Let's say the stock price started off around here, whatever, let's say there's $50 or something, right? You'll be profitable this whole range here. So if it goes down to 45, you'll be profitable. If it goes up to 40, you'll be profitable. But as soon as it breaches that, it starts to lose money, right? So let's say the stock falls from 50 down to 45, we're fine, we're still profitable. If it falls to 40, that's when this thing starts to lose money. But there's a maximum loss to it, right? So it's called a defined risk strategy where it will make an income whenever we create this thing. And then if it goes against us, which means basically when the stock market goes up or down, or whatever stock we're trading goes up or down, then we lose money, but only to a limited extent, right? So in that ways, it can be quite stable, right? And as an income producing strategy. So that's why we're getting graphs that look like this that are quite stable in nature going up, right? It's an income producing strategy, right? Okay, so hopefully that explains that a bit. Alan says butterfly condors are about a narrow range of profit, correct? Yeah, yeah. You're not going to be you're not going to shoot through the stars on a single day, but that's kind of the point. You're making like a little bit of money every single day and it builds up over time. That's essentially what it is. Butterflies and condors, by the way, are very similar. This is a condor. A butterfly looks almost the same, except the difference is options, strategy. The difference with the butterfly is that it looks like this. So whereas with a condor, these two are spread out. This is two cells, but at the same price. So let's say this is the price of stock, $50. You sell both a put and a call right at that $50. And then you buy outside here. Whereas a condor, you would probably sell, let's say 55 and 45, right? So you're not selling at the exact same price. So they're very similar strategies in the sense that they're income producing strategies. They're both net negative and they both have four components to them. But the condor and the butterfly differ because one of them is more spread out between the cells, whereas the other one, they're both in a tight or in the same location, right? Hopefully that explains this to you guys. For those of you that don't really know options too well, I don't want to bore everyone that knows options already, but look into this. There's definitely a lot of very interesting ways to make money using these strategies. Another question from Avinish, does Algo sell iron condor or butterfly condor? We have ones that do both. We have ones that sell iron condors. We have ones that sell butterflies and then convert to condors. So we have strategies in both, Avinish. Worth says, Alan, our butterfly condor strategy starts as a butterfly and switches to an iron condor if the butterfly fails. Yes, exactly. Correct, Worth. Thank you for saying that. And then Avenus says, is it 0 DTE or 1 DTE? That's also variable. It depends on what you're talking about. The Condor Martingale is a 1 DTE. The Butterfly Condor is a 0 DTE. Although it'd be interesting to test both, right? Just because that's the way it's set up now doesn't mean that's the way it should be done. I actually met I met some very interesting people in Florida. I met a lot of these algo trading people out there, but there's one guy that was actually doing something similar to what we're doing, selling condors. He constructed a little different though. His whole thing is making 20% a year, but very, very stable with low drawdowns. Because he's like, that's what corporations want, which makes sense if you think about it. Like, let's say you're an insurance company. I don't need to do 100% a year on my algorithms. That's not what I care about. I care more about stability. So he's focused more on that. But the way that he was able to do that is he didn't do 0 DTEs or 1 DTEs. He did like a week out, right? Or a month out, right? So I think there's some interesting things that we could do around that too. So even though I say right now we have 0 DTEs and 1 DTEs, I think doing this a week out or a month out, I think would be an interesting thing to experiment with, right? So that's to answer your question, Avanish. Jim says a trick bit of the strategy he's been running is it starts out as a butterfly, then tries to convert the condor if the price has moved too much. Correct. Cody says, anecdotally, I was running the code 6 commits behind on butterfly condor on paper and seeing similar but not exactly the same issues during the same time period of trading. That's interesting, Cody. I'd like to hear more about that. So did you run the code from before we did the switch to the multi-leg?
Yeah, I can see at the commit where you added multi-leg as the commit message, and I am 6 behind that.
Okay. Okay. Why not 1 behind that? Why 6?
That's just what I had. I
Okay.
hadn't pulled down latest in quite a while.
Okay, I see. All right. And how's that been doing?
It was doing very similar things, poorly to summarize a point. Uh, but it kept just kind of I started it off at like 100,000 in paper and ended with like 97 something.
Okay. So
So
almost flat but then did it like shoot up and then come back down, or has it just been kind of
no, it actually followed it seems like it followed a pretty similar trajectory, but for my webhook for whatever reason it never actually published the graph for me.
Yeah, you need to add a database to it to do that.
Oh, okay.
Yeah. It's one of the count something DB. I think it's the variable that's what that reads. And when you add that, basically it's supposed to be a Postgres database. So if you add that connection string there, then it will produce those graphs because it needs to save. The reason why it's able to produce a graph is because it can look what's the account value over time. In order
Gotcha.
for it to get that, it needs a database, right? So that's why.
Okay. Yeah, I did not add that part.
Yeah. Okay, cool. That's good to know too. So now we're hearing a bit mixed results. My employee's saying he made money off of it. You're saying that it followed the same trajectory. So okay, so this is sounding interesting to me.
At
Uh,
least in paper it did, mind you. I didn't do real money.
yeah, yeah. Okay, interesting.
So that might be the delta there.
Maybe that is possible. There are some differences between paper. It's a 15-minute delay. Your fills are probably going to come in at slightly different prices. So, you know, but either way, it's interesting to know that you're running that code and you're getting similar results because that's very telling, I think. Actually, I don't think we have. It's unfortunate we don't have the guy here today that originally came up with this algorithm, Kevin Goggin. I would love to ask him how this has been working for him. He actually sent me an email. He said he's traveling and he's on vacation or something like that. But I would love to ask him how he's been doing because he manually trades this. All right. So I'd love to know what his thoughts are. As a side note. Okay, and then gotcha, thank you, no problem. And then Jim says for better trader UI, you might want to try Trades Viz. I haven't myself. Trades Viz. Okay, let's see. Trades Viz. Trading Journal. Yeah, there's a bunch of these. I've actually been thinking about taking our algorithms and tying it up to these things because you know, we have this stuff in Discord and it's like cool to see it in Discord, but I'd like to be able to show people better graphs. So this is what we have in here.
Can you
Or,
see there, like it shows there, it has auto sync with Tradier and as well as other
ooh,
brokers.
Tradier, do they have Alpaca?
Have 100, yeah, they have 100 brokers.
100 brokers. They do have Alpaca. Thank you for showing this. This actually sounds fantastic. I think I'm going to start trying. I think I'm going to use this. Can they share? Like, can you make your thing public?
I haven't used it. I just Googled it.
Yeah, because this sounds very nice. Import 300 executions per month, 50 plus performance visualizations, auto-generate charts, features, charting, auto-generate charts, charting view, trade explore view.
Now, I'm sure there
options
are
flow.
local tools that we could run that do something similar. But I guess kind of my question is for people who want this, do you want to run your own code for this, or do you want a all-in-one solution like this, you know, like a SaaS like this TradesViz?
Yeah. This sounds very interesting. I'm definitely gonna check this out. If they have a trial, I'm definitely gonna use it and see how it works.
Yeah. Well, to answer his question, I would do the free version first and write my own code. But once I start making money, then I use this.
Well,
Yeah.
this is yeah, free trial. I mean, you can find out if it
Yeah, they
works.
do have a free
Yeah.
trial.
Yeah.
Yeah.
And so one thing from last week, which I'm not, I just want to revisit the time series neural forecast
Sure.
notebook.
Yep. That's not
Because so we was able to get it working to run a single forecast, but the rolling window was trying to run the whole training separately. But I've been reading the documentation. I've been trying to figure out how to use the refit parameter because it has built-in features for doing this rolling forward window training in the cross-validation function. And so I'm definitely interested, you know, if any, you know, so maybe we should, you know, if somebody wants to schedule another meeting to, you know, a different time to work on that or something, or maybe we could synchronize in the Discord. Like I've been looking at it, it's a little complicated, but I can see the parameters we need to change. I just don't 100% know how they're supposed to be changed, but I'm fiddling with a notebook to try and break it down and to be able to do that uh, that testing with the full rolling window.
So why don't I help with this a little bit here? we actually don't have a channel for AI. What I'll do is I'll make a public channel for artificial intelligence trading, right? AI trading. We used to have that. I deleted it. Let's bring it back. Um, and then there's three of you that I know that are working on this. And I was actually speaking with this person, Keegan, yesterday. He's based in Australia, very smart developer, and he actually has a working back test with a Kara's model. So he got like this research paper that they made a bunch of money trading using AI, and he wanted to replicate that research paper. He's a very smart guy, very good with AI. I think you'd very much enjoy working with him. But he showed me this thing yesterday, and it was actually working pretty well. I don't know what his results were. I didn't see his back tests. We didn't get that far, but I mentioned you actually, and I mentioned Latoya. I think Latoya, you're here today too, right? There's a lot of people here today. Yeah, Latoya's here. Yeah. I think it would make sense for you guys, at least for the three of you, because I know you guys all are kind of actively working on this. So let me share this with you guys. So this is, what is his name? Big Bird.
Yeah, he did connect with me. And
Sure.
I'm familiar with the FinGPT work. AI Finance is actually a nonprofit. I think they're a awesome organization. And so one of the interesting things to do will be to make a FinGPT Lumibot strategy. That'd be fun.
Yeah, absolutely. That'd be very cool. Made a Discord channel specifically for AI efforts as well. All right, cool. So this way you guys can all collaborate on this because as I was telling him, and I'm sure you agree, like when people work together, it's a lot easier to do stuff, right? So okay, so I've added this to a list as well. So if you guys want to work on this today, we could spend time working on that too. Trying to build out this AI trading strategy. Okay, cool. Anything else that you guys would want to work on today?
I have just one question for a possible trading idea in the future to minimize drawdowns on some of these trade bots we're doing. And that is, is it possible to code programmatically make a trend line?
What do you mean by that exactly?
Well, on a chart, if you see a chart, right, it goes up, 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 and then down, breaks the trend and goes down.
Mm-hmm.
And you can do a moving average. It makes kind of a wavy line. But is it possible to programmatically code in just a straight trend line that connects the lows of a trend going up?
Yeah, for sure. We could definitely do that. There's a bunch of different ways that we can. We could take, the start of that graph and the end of the graph and just put a line through it, right? We could even get more fancy than that, but that sounds fairly straightforward to do. Is that something that you'd want to build a strategy around? Like, why are you thinking that? Where's this question come from?
Oh, the question comes from that moving average crossover that you did last month. And it has very good returns, but then it has these drawdowns because it's lagging, right? But I noticed if you just would draw a line under the lows when you had a big trend, that would get you out much sooner and minimize the drawdowns. That's where it comes from.
That's interesting. Yeah, we could definitely do that. And that's actually quite simple to do. If you want, I could add that to a list as well.
Oh,
That's
sure, yeah.
a straightforward thing to do.
Yeah, I'm
So
interested in Martingale too. So, just happy to do whatever the group wants.
okay.
There are
Yeah.
Python libraries that integrate with pandas and basically compute any TA you've ever heard of.
Cool.
Yeah, we have tons of that stuff. That's where we got the moving averages from and all that. This sounds even simpler than that. Like I don't even think we need a TA library for this. Like that's just like it's just like connect the dots, right?
Yeah, connect the dots, yeah, and
Yeah,
project the dots.
yeah. Um, I think that'd be very easy to build, knock it out in like an hour. Yeah.
Wow, cool.
So yeah. Um, So I'll add that in. Trend line bot, right? I guess you'd buy or sell if it falls below the trend line or something along those lines.
Yeah, yeah.
Okay. Okay, so I'll add that in. So I'll call that trend line bot. I think that's a good way to call it.
Yeah, that'd be perfect.
Okay, perfect. Okay, cool. Anything else that you guys want to work on today? Okay. So I'll save this. I'll share this with you guys. So we're now on to the second part. So save to meeting pool, launch. Okay. So you guys have 4 things that you can vote on. Please cast your vote. Whatever you guys decide to work on today, we'll work on that for the remainder of the day today. All right. Okay, and while you guys do that, I'm going to get some water, use the bathroom, and I will see you back in about 5-10 minutes. All right.
So Latoya, are you here?
Yes, I'm here.
So have you looked at that notebook any further?
I have not.
Okay. So when you made the rolling version, is the logic of it it reruns the experiment for each time period? Is that correct?
Yes, that's what I was wanting to do, but I had
Yeah.
never. So I just use Google Colab, so I would have never been able to finish running that code, like the
Right. So
free
that's
version.
yeah. Yeah. So yeah, so I was I was looking into that about how to, because we would like to see the rolling for it. So in looking through it, so what I found is the documentation for that neural forecast, that crossover function, the cross validation function. So it has built in the rolling window parameters. They just have to be set. And then
Okay.
what it does is it trains for the initial period, it trains the model in the initial period, does the validation, and then extends that model with further data. It doesn't start over from scratch every time. So it will be able to run in a very reasonable period of time. Just have to
Got it.
figure out how to set the parameters correctly. So I was wondering if you had looked into how to doing that. So it's because there's one of the key parameters is one called refit, and that's the one that tells it to at each stage, if you're moving the window forward, to train with data up through that point.
Okay, that's good to know. So I can look into that more this week too. We can have multiple eyes on it.
Yeah, exactly. So it'd be nice to, it's I just spent a few hours on it today trying to dig through it, and I haven't quite got it's a little dense with the documentation. They got lots of pictures and stuff, so that's why I'm saying it might certainly be, if there's a time, we can set up if there's a time that works that we can put together a Zoom, or just with the voice chat on the Discord, we can get on a same page and start, fiddling with the code. It's like now what I'm doing is I'm breaking down the notebook so that I can just try one, call one experiment at a time and see how those parameters work.
Okay. Yeah, and I'm perfectly willing to meet up with you. Big Bird that Robert mentioned, he sent me a friend request on Discord too, so we can see if there's a time that he wants to join us as well.
Yeah, AI finance is really cool. So they have a whole, I think I haven't, I've looked through some of their stuff, but I haven't looked into their, what their testing framework is. I assume it's not neural forecast, but maybe it is. But I think it is. So yeah, I think they probably have a whole different system.
Okay.
But yeah, they have a really great, really cool thing. They're doing fine tuning on LLMs, and including they share, it's all open source. So they, including the code for doing the fine tuning, which is awesome.
Mm-hmm. I'm gonna add you and then I'll just message you like days and times that work for me and you can let me know what's
Cool.
good.
Yeah, uh, I'll take my, yeah.
All right. Hey guys. Okay, so seems like we have a winner here by a pretty large margin. So let me share the results with you guys. Essentially we got, let me screenshot it and show basically. This is what the results look like. If you can't see on your screen, you could see it from my thing here. Essentially, we had 10 of you vote for the Condor Martingale, so overwhelming amount of you guys want to do that, over 50%, in fact. Second best was the butterfly condor. And then we had AI trading in third place, and then the trendline bot in last. So I'd say that's a pretty clear result. So let's get started on working on this condor martingale. So let me pull this up here. Here it is in paper trading. This trade biz. Let me pull it up in our Visual Studio Code. Pull that up. Just gonna clear some things out here because we have a lot going on. Okay, there we go. Here's our condor martingale. Okay, awesome. All right, so there's a bunch of things that we can do with this. So before we actually really jump into it, let me do one thing because I kind of mentioned this at the beginning. I'd like to run a back test over the same time period. Let's check first. I want to see exactly the configuration that's running for this one, and I want to run a back test over this time period and see how it actually would have performed according to our back test. So I find that one thing to be quite interesting, how I'm wondering whether it's actually diverging from our back test or if that actually would have been expected. Let me pull that up here. But what else would you guys like to work on with it? Do you guys have anything in mind specifically to work on with this algorithm? Here's the one that's
The only thing I had in mind certainly was just seeing in that instance what happens if we do use like a, something higher leveraged, see if it continues to be that stable or if not, because certainly that stability on top of higher leverage I think could be a tremendous thing. But that's
yeah, yeah,
that's
I
very
think
simple.
yeah, I think there's some interesting things that would happen there. So my guess, and for those of you that trade options more than I do, but my guess would be that these higher leveraged instruments, they probably would have much higher implied volatility on these options, which when you sell can be profitable as long as they don't move too much. I think we'd have to do some tweaks, probably like lower the delta or something like that, in order to be able to trade this. But yeah, we can absolutely try that out. I think that's a very interesting thing to test.
Uh, the huge issue about that would be they're not as liquid. They're not nearly as liquid as SPX or SPY. So that would cause a lot of problem actually hitting what you want when you're trying to buy and sell. I think that's the only reason people prefer doing SPX. Even people prefer doing SPX as compared to SPY because SPX is just a little more liquid. So that would cause a big issue.
Yeah, I very much agree with that. I mean, when we back test it, we'll see kind of more details about that. But then, when we run the back test versus real life, there could be some discrepancies there because of the liquidity. So I definitely agree with you on that. But even in the back test, we saw a discrepancy between the SPY and the SPX, right? As you'd think they're both pretty liquid and wouldn't show up too much in back test, but actually does. When we back tested the SPX, we got pretty different numbers than the SPY. I don't think you were here last week for that, Ali, were you?
Yeah, that's me.
Yeah, were you here for that last week when we did it for the SPX?
No, last week I couldn't make it.
Okay.
You're also going to have wider spreads on the option chains on those leveraged products. But it would be cool to get this thing working on SPX. Robert, the only problem is with doing that, I'm not sure how to fix it. I don't know if you remember the correspondence that I shared with Tradier last week. I've been emailing them, And they don't have real-time data even on live accounts for SPX. It's 15 minutes delayed. So we would actually have to get pricing data from another source, I believe, until they get that implemented. They have SPY real time, but their SPX their index data is 15 minutes behind. So in order, I think we would need the actual current price in order to trade it, unless we use the SPY price and then just put in orders for SPX. But we would have to get around that some way.
Right. So this was delayed pricing, but on the index itself, not on the options, right? Like the
I
options
don't,
have up to date, right?
yeah, I don't think it applies to the options. It's just the actual price of the index.
Yeah, I think I remember seeing that in the messages because you shared the screenshot. I think that they said that the options were fine, but SPX was delayed itself. Now, when we do this with the martingale, I mean, I don't think we actually pay attention to the price of SPX. Or actually, no, wait, we do. We do because we use it to figure out what strike prices to use.
The current price, I guess.
Yeah. Yeah, so I guess that to that extent it could be an issue. Um, although what we end up buying is the delta. It's when a delta crosses a certain number for the option rather than, the underlying. So I don't know if that makes much of a difference. I'm not sure if that would really impact the strategy.
We might just have to walk it forward and look at it that way.
Yeah, definitely.
Well, we got you downloaded minute data on SPX last week, right?
Yes, correct.
So we could find out what how closely they track, right?
Mm-hmm. Yes, we
Because
can
you could just
definitely.
use SP. If it's close enough, you can just use SPY for your price information.
Yeah, yeah, it does track quite closely. I know that for a fact. How closely we can actually test that? Yeah, you're right. Like we do have data for both. We can definitely run that calculation. You know, I think that they're like extremely close. Actually, we might be able to do it this way. If we go SPY and then we'll compare it to SPX. I guess S and P 500. I guess they call it I and X here. But I mean, like that's pretty damn close, There is a bit of a divergence, but it seems very minor. Yeah. And I think it has more to do with actually, I guess there's a couple times actually diverges. So here the ETF went up, whereas the S&P 500 went down. But this seems to be staggered for most part because of a time issue, is what it seems like. That one started at like 9:30 versus 10 a.m. for some weird reason. Um, I don't get why that's happening. But the direction like it seems to be extremely highly correlated. You know what I mean?
And so, how close does it have to be for the? Because you're using it for determining, what option prices you're looking for, right?
Yeah, we're using it to determine strike price. Well, sort of actually, I mean, not completely. We're using it as like the way to start seeking from. What I believe we're actually buying is the options with specific delta on them, not the I don't think we're actually using the SPX price to determine that. So I think we'd actually be good, to be quite honest with you. I don't think it would make much of a difference. We can explore that. We can get deeper into that when we go through the code. Okay, cool. So let's see here. I'm pulling up our the configuration that we had or that we have still running for our paper trading. So here it is. We're basically using these quantities 80, 180, 640. So that's that one right there, 80, 180, 640. I'll even tag this. We'll go say this is running in paper trading. So those are the figures. And then the delta is a 14 delta, which we set here. And then we need to update our back testing period to now be the 20, I guess we'll do 22nd, which was yesterday. So why don't we run it from March 22 to April 22 and just see how this works out. I think that's all the right parameters. 81, 86, 40. EDX, this is pre-ED or ADX is none. Okay, so we'll run that back test. I think that's a good start to find out, how does our back test match up to what actually has happened over the past month? Because over the past month, it's done so extremely well. I feel like the back test didn't really show it like that unless, maybe things have changed in the past month. So let's do that. Okay, cool. So we're running that. The other thing you guys are saying is to try different symbols. So now I guess when we try different symbols, let's say there's a couple of these leverage ones. I don't know which one will have the most liquid options, but we can kind of explore. Like one of them is U Pro. Another one is TQQQ. These are triple leveraged. I think these are kind of the more popular ones for the leveraged ETFs. And if we take a look at their options, they don't even have dailies. They actually seem to only have weeklies. So that's definitely something to pay attention to. Right? So U Pro has weeklies. Let's see here. TQQQ also has weeklies. So that is definitely something to take into account. If we're going to be trading this, one of the reasons why it makes so much money is because it trades every single day. If we were to trade one of these symbols, we'd only be able to trade once a week. So I don't know if that changes your thoughts on this.
It does certainly seem worse when put in that context.
Yeah, because it's an income generating strategy that
Yeah.
sells every single day and like makes like a little bit of money every single day, like $100 today, $100 tomorrow, 100, like that sort of thing. And if you can only trade once a week, that kind of puts a damper on that, right? Like I would expect it to be like 1/7 of the results of the other one. So
Hello, Rob.
you want to try that based on that information?
Hello, Rob. I'm not sure. Could you say why it only trade once per week instead of once a day?
That's just the expiry dates for the options. See, I'm looking at the expiry dates. There's an
Oh,
expiration on April 26th. Another one expires May 3rd, May 10th, right? And if we look, unless there's
gee.
something wrong with Yahoo Finance, but they usually have the latest stuff. Go here, yeah, April 24th, 25th, 26th, right? So it has expirations every single day, pretty much.
Oh, I see.
Yeah,
Yeah. Okay, cool. Thank you.
yeah, no problem. Yeah, so I think that is a pretty significant difference here, right? So even if it did work very well on those instruments, the fact that they don't trade every day is quite a large difference here. Yeah. That being said, maybe there's some other symbols that we could trade that would make sense. I think we tried this on individual stocks It didn't have the best results from what I remember when we tried it. Actually, I guess that was on the butterfly, right?
IWM was good on the butterfly.
Yeah, IWN did very well. Would you guys want to try that? We can backtest that and see how that works.
That is daily expirations.
It does. IWM options. Yep, has dailies. Okay, so that's an easy thing to try out. So why don't I just run that? Just because. We'll see what that looks like here. 14 delta, we have this specific schedule, right? We'll run this full spectrum here. And let's go Python, options corner martingale main. And I think it's taking a symbol from up top. Yeah. Okay, so we'll get the results to that pretty soon. This one here is downloading quite a bit of data. 42 minutes. It's actually quite a while. It already blew up. That's interesting. So this Condor Martingale, the same one that we have running paper trading, or is that from a different run? Let's see here. That 14. That's very odd. Let me stop this and rerun it because I don't know if this is because of something that I did, or if it's just what we were running last time. We'll go 322. Oh, because I was running on the SPX, that's why. SPX. Yeah, so let's first of all switch out to SPY. So I'm gonna stop these back tests actually because I didn't modify them properly. So the first one that we're supposed to run was from March 22 to April 22. We're using SPY. We actually had a bunch of these other things change here too. Start seek steps. Spectacular collapse. Debt reduction. I remember we added all these different things last time around. Let's see how this works. Maybe we screwed something up last week too. So let's run this and see what happens. There it is on SPY, and then if you do the IWM, let's go back further with that one.
Robert, how much capital would it actually take to run this Condor Martingale with 80 to 320 contracts, do you think? Roughly.
Well, this is set up to be a $25,000 account.
Okay.
That's the assumption in the back test.
Any idea what the minimum would be?
I think this one also, actually, I don't know, would it violate the PDT rule or not? I'm not entirely sure. Because technically you're holding it overnight. Although I do know people that that Inside Options group that actually does this inside of their for their customers. I know they have advertisements going that says minimum of 26,000, right? So that makes me think that it violates the PD2 rule. Although the fact that it's a 1 DTE, sounds like it wouldn't. So I'm not entirely sure. But I think that's the real question.
Well, I mean, if you're opening a trade one day and closing it the next day, you wouldn't have to worry about PDT. But I was just wondering about like the capital required to work with 320 contracts in general.
Well, here we have 80, 180, 640.
Or 640.
Yeah. We can do the math on that. I'm not the one to ask about that, to be quite honest with you. Um, I think when we did it, we scaled it to being a $25,000 account. I think that's what it's scaled to. Although the
Okay.
640, I think, would be more than the size of the account, as far as I remember.
Okay.
Yeah. But yeah, I'm pretty sure 80K would be fine with it with a $20,000 account. Or even smaller, you know. But either way, you can scale it up and down, right? Like if we're running this back test and it's assuming a $25,000 account, if you could run this with a smaller account or a larger account, just scale accordingly, right? So if I mean actually this strategy is literally does that, right? If you run it in real life, it will actually take the value of your account and scale this, I believe. I think we could double check that if you care about that answer. But
Yeah.
either way, you could scale this up and down, right? Like if a 25K count is 80, then 12K count would be 40, a 6K count would be 20 and so on and so forth, right?
So it might choose that based on account size.
Yeah. Yeah.
Okay, got it.
Yeah, actually, one way that you can check really quickly if it violates the PDT rule without even running the strategy is just try to trade it manually, right? Go to your broker and just hit those buttons, and see if they let you do it, right?
No, you don't want to do that because they will not stop you from violating the PDT rule. And if you do, you'll be closed out of your account for a minimum of 90 days.
Oh, really? I did
Yeah.
not know that. That's a good
Yeah,
question.
they don't protect you.
Huh. Interesting. I was not aware of that. I do
Yeah, that's
know
what it's
that when I
mostly.
tried to run the butterfly when my account dipped under 25K, they actually stopped letting me trade. So I was assuming that they were actually blocking me because of PDT, but
I've
maybe that's not the case.
never had a broker do that to me before,
Yeah,
ever. I've used lots of different brokers. So
yeah.
that would
Every,
be an
every broker is
anomaly.
different, but at least
Definitely
that's
be
what
an
happened to
anomaly.
me.
It'd be worth looking into.
Yeah. The error message that I got though was something about margin. It said we violated margin, right? You don't have the margin to do this. It didn't say anything about PDT. It said you're
Okay.
not margin, which I just assumed was the PDT thing because maybe they just don't have an error message for that. Maybe they use the same one. I don't know. But I did get an error saying around margin. Okay. So I ran this thing for the shorter time period. I haven't ran this thing yet for IWM. Let me change your back testing dates to be longer, and then we'll run IWM. We'll open this up. We'll go Python options, Condor Martingale, and we'll run that back test. And that'll take some time to finish. It might not finish by the end of today, but at least we'll see what the results are when that eventually does come out. Okay.
Hi Rob, I have one more question.
Sure.
So when we try to do back testing, so based on what kind of philosophy do we determine the duration of the back testing? I've seen you mostly use the data from like 2020 to 2024. Is there a reason for this? Not like to go any further into the history, like back testing with 10 years of data, something like that.
Yeah, so the reason for that was because we had a limitation with Polygon. They would
Okay.
let us go back 4 years. So that's what I was paying for. I paid for that data.
Yeah, understood. Okay,
However, I did pay for longer data now, so we could actually probably go back further. I think we could
I
actually go
see.
back like 5 or 10 years, maybe.
Okay.
So,
So
so
in that, mhm. Yeah, Rob. So when we are doing this, if we try to do back testing at home, if we don't have Polygon paid subscription, how can we do that?
So they have 2 years for free.
Mm-hmm.
Go back up to 2 years for free.
Mm-hmm.
Although it will go pretty slow, right? If you're not paying for it. So if you get it
Yeah.
for free, you can go up to 2 years back. But then if you want to get,
Mm-hmm.
further back, first of all, or if you want to run faster, then you're
Mm-hmm.
gonna have to pay them. And they have tiers, right? They're actually not that expensive. If you take a look at Polygon here,
Mm-hmm.
they have different pricing.
The developer plan's pretty good. That's that 4 years. What's funny is that on the advanced, they don't say how far back it goes for options.
Oh, it just says 5+. We don't know
Yeah.
how.
I spoke to them about this though, and on the indexes or like on like SPY, QQQ, I think they
Mm-hmm.
said it goes up to like 10 years. If that
Understood.
was, yeah, so it goes back quite far on the large
Mm-hmm.
ones. But they say 5+ years because there's like smaller tickers included in that.
Yeah.
Some of
Yeah.
those are closer to 5. Yeah.
Mhm.
So I pay for
Those,
this. I pay for the 199 a month.
right.
Yeah.
Yeah. Yeah.
Yeah.
It's about like more than $2,000 a year.
Yeah, well, I mean, it's a business expense, right? So,
Yeah.
you know, you spend more money on other things. I think if we're going to spend money on anything, that makes sense for us as a business. For
Mhm.
you, if you're running this, I mean, we run this, we show you the results. I can't share with you the API keys. I'll get in a lot of trouble for doing
Mhm.
that. They've actually even
Mhm.
talked to me about that once and tried to charge me a crazy amount of money for that.
Oh,
Uh, by crazy, I mean they want to charge me like $5,000 a month. And I was
oh
like,
my.
hell no, like
No.
I kind of yelled at them a little bit. I'm like, what the hell, like we're teaching people how to use your service. And you want to charge me that? What are you crazy?
Right.
Um, so I got away with that, or they stopped charging me that, or trying
Got
to
you.
charge me that.
Mhm.
But yeah, if you want to do that personally, you will have to pay for one of these plans. But you could always start with the basic again.
Yeah.
The only problem is that it's slow, right? It goes back 2 years,
Mhm.
but when you're testing options data, it's 5 API calls per minute.
Right.
And with options, you're going to need to make a lot of API calls to get this data.
Yeah.
So at least your first run will take very long. Like you might
Mhm.
have to take like 24 hours for your first run with one of the
Understood.
strategies. But then
Okay.
later on, then it goes much faster because you already have the data, and then it's just a limitation with your computer.
Got you.
But the first run does take quite a while to download all that data.
Mm-hmm. I see.
Yeah.
So when you call that like data download, does it really just download it on your computer and save them forever, or uh,
Mhm.
is it like a stream? Like you call that and data is here stored in the memory, and then when you don't use or shut off the computer, then the data is gone. Next time you
No,
have
no,
to
it
re-download.
saves with your computer. There's like
Okay.
a specific spot on your computer. If you
Hmm.
want, I can kind of dig that up and tell you exactly where it goes, but it saves
Hmm.
it as feather files. So
Okay.
dot feather is the extension. So if you
Feather.
if
Okay.
you yeah, if you run this on your computer and then
Hmm.
do a search for dot feather, you'll be able to
Hmm.
find where these things are being saved.
Got you. Yeah.
Right.
Thanks so much.
Yeah, no problem. Cool. There's a couple other questions here. Asim. Sorry, I hope I'm pronouncing that correctly. What is the margin used per trade? Um, that is a good question. We would have to kind of take a look into that. Sorry, I was just hearing something on my window. Someone is apparently trying to do a drag race down the street. That is not good. Anyways, yeah, so in terms of margin used per trade, I'm not sure. We'd have to look into that. Yeah, we'd have to actually go into the details of that. I don't know enough about calculating option margin to tell you offhand what the margin used is. But I do know that we size it according to the account. Like we've done the calculations on this before. Another question. Avinash says if you do round trips, then they will if the value drops below 25. Yeah, exactly. Right. So I think that's why my account kind of got stopped out is my account value dipped below 25. And then ever since then, I wasn't able to trade. I think the reason why is because of PDT, but I don't know. Then we have another one here. If it is one DTE, if you close yesterday's trade and open another one for tomorrow, you did a day trade, correct? I'm not sure. Um, Actually, I think you might be right in that. Now that I think about it. Well, so Avinash, you're saying no, but the reason why I think that this is day trading is again because that company actually specifically advertises saying that you should have over $26,000. So I'm assuming that if they had a way around it, they would get around that because that's a pretty significant limitation. But it is opened and closed on the same day because the way the martingale it is open closed on the same day because you're going to open it at 3:45 p.m. the day like today. Let's say we run today, right? You'll open up on 3:45 today and then close it tomorrow in the morning. However, you're also going to open another one at 3:45 on the same symbol. It's a different expiry date but the same symbol, and I think that's what constitutes as a day trade, right? The fact that you're opening and closing, even though they're different expiry dates, it's the same ticker symbol. So I think that's still considered a day trade. So if I were to guess, that's probably the reason why. So Worth, you're saying it doesn't matter. It's a swing trade, not a day trade.
Yeah, I've done a lot of working around this issue, and as far as my knowledge goes, which is fairly substantial, if you open a position and don't close it till the next day, that's not a day trade. So
Yeah.
you're closing it in the morning, and then you're opening a completely new trade at the end of the day, towards the end of the day, and you're not closing that trade until the day after. So you're never actually closing the same position the same day.
Yeah, but I don't think that matters. I think it matters that you're trading the same symbol. I think the fact that you're trading the SPY, even though it's technically a different trade, and it's technically even a different, completely different security, actually. You know what I mean? Because it's a different expiry date, a different everything, but it is still trading the SPY.
Yeah, but I
So
mean, when would you say the day trade actually occurs? Like as soon as you open the second position, would that be a
yeah,
day trade?
yeah,
No, it's
yeah,
not a trade if you open a position. It's just an open position. A trade is closing a position.
yeah. I don't know. I mean, again, I'm not sure about this. I think, would have to check that out. I think this is worthwhile to ask the broker. Like
Yeah,
this
we'll
is,
have to ask them
yeah,
because usually a trade is in and then out. It's not out and then in. Those are two separate
right. It's
trades.
reversing the order. Yeah,
I'll send them an email just to make
yeah,
sure, but I'm pretty sure I'm right on this, but this is something that we need to find out. So I'll send an email just to make sure. I'll give them a call because people get really confused around this subject. So I'll have to go to their risk management department or
yeah. Even people at work there, they don't really know what's
yeah,
going on a lot of
exactly.
times. Yeah, yeah, I agree.
I'll look
Um,
into
okay, sounds good. Yeah, they don't care if it's a different option. Yeah, you guys are kind of going back and forth on this. Not sure if you can answer this, but is this strategy counting on theta decay or is it selling volatility by building the butterflies around overpriced strikes? No, it's a theta decay thing. We're making money off of theta decay. So it's a very good question, Asim. I can tell that you really know your stuff with options. But yeah, the primary way that we're making money is through theta decay. Um, Maribel says, yeah, he's right. Open is not a day trade. I've traded on 5K for many years. When you buy and sell same day, it's a trade, butterflies and condor, etc. That's what I thought, as long as you don't do round trip. Okay, I mean that, yeah, that'd be great. So that means, you guys can use this if you want. Maribel says when you buy and hold for the day, it's not a day trade. Yeah. Okay. Yeah, you guys tell me. I'm not sure. I'm using over 25K in my account personally, so it doesn't impact me. But you let me know. By the way, the back test came back over the past little bit. This actually makes a lot of sense. So here's the back test over the past month. So this is going from, when was this beginning? It was March 22nd to April 19th, which is March 22nd to April 19th. I don't know if maybe we had some sort of a bug happen on this day because there was a crash. Like if you guys look here, according to the back test, we should have had a big drop in our account value here. We
But
should
this
have lost a bunch of money on, what is this, like, what is it? These are different months. Oh, actually back test this over multiple years. Oh, I
Yeah,
didn't
back to last year.
I didn't even realize I did that. Okay. Um, yeah, so would have had a big crash. But yeah, it seems like it's been doing quite well actually over this time period. So if we go, let me rerun this thing. This is silly that if it ran that quickly, then I think we could redo this. We'll go spy and we just change the date to be 24 March. Let's see what happens there. Yeah, because this one actually had, it was up quite a bit. If you excluded this explosion that happened here, it would have been up like a lot. It's almost a straight line, which is very impressive. But I don't think it would have been up by that much. This is what, March here. So say this is 20% and then went up to 48%. So 20 to 48, that's what, 28%? Yeah, I still think that our paper trading actually did better than the back test. That's very peculiar. That's interesting. I'd love to know why that's happening. We can actually compare. Okay, so here's, okay, that happened very fast. Okay, so here's basically the back test over the same time period that we've been running it in paper trading. And we're doing a lot better in paper trading for some reason than the back test. Our back test is telling us that we would have been up 14%, whereas in our actual paper trading, we are up 44%. What the hell? That I think warrants some investigation. I would definitely take a look into that and figure out why is there a discrepancy here? That's actually a very good thing.
That's serendipity. That's a
Yeah.
nice.
We're doing better than the back test. Okay, that's great. But I still like to know why. Um, let's see what you guys are saying here. So let's not do round trip, 14% a month. I take that anytime, any day. I agree with you on that much. 14% a month is quite good. If you look at it over a longer time period, that is kind of what it does. The problem with the martingale is that it blows up every once in a while, and we've had a lot of discussions on how to fix that. But it is quite substantial gains, and it is quite consistent. Just it has these blow up periods that I think we would have to do something to fix, right? We fixed that in the past by using a larger delta. We fixed that in the past. There's this guy last week that was here. They had a specific technique around this where they would miss the first day, right? And then kind of go from there. That made it less likely that this sort of thing happens. So we could use that same type of schedule. There's a bunch of things that we could do to improve this. To me, this is the biggest thing is removing this like big drop, right? Because this is like holy shit territory, right? Like this is not something that I'd want to go through. Also, I think that there's something maybe there's something wrong here because, or maybe let's see, let me pull up. This is the actual trades. Lost once, lost twice. It should not, it should have actually recovered. Should, like theoretically, it should go drop down and come right back up again. If you look at the other graphs that we had, when we ran this, it looked more like this, right? Or when we take a look at the ones that were given to us here, same sort of thing. It's like it goes, it's going up, and then it crashes, but then when it comes back up, it comes back up higher than what it was before. And then does the same thing again. And then it's like, when it does that dip, it's temporary and then comes back up again. Whereas what we're seeing here is it dips, falls, and then continues from a lower level where that really shouldn't be happening. It should be like this. It should fall down, but then come right back up again and continue on. The way that these things are structured, the frequencies of it. So, okay, there's a bunch of different things we could try here. So what would you guys like to try out? I think there's a couple of ideas around here.
Well, how did that work out last week when we implemented his improvements? Did we get any good results from that, or?
Yeah, we ended up getting graphs that look like this, which is more in line with what, the strategy is theoretically supposed to do, or theoretically, historically has done, right? These guys have been trading this for the past 2 years with real money. Their charts look like this. And they look like straight lines, basically, with these big drops every once in a while. Like around COVID, big drop around COVID. Around here, this is probably when Powell announced rate increases, right? So like in times like that, it tends to have these like blow ups, but then comes right back up again. Those are the improvements that we made last week. And that specifically was following like the schedule, right? The schedule is kind of the key there. And then when we tried it, this was us trying it with the SPX. And when we tried it with the SPX, we didn't seem to have exactly that kind of looking graph. So it makes me think that there's something with our back test that's just not doing things exactly how it does it in the real world. Like there's something missing here, right? Yeah, because the graph should not look like this. It should be more like a straight line. This is when we started testing with SPX. I think there's room for improvement there, right? So I guess there's a couple things we could do. We can try to improve this with SPX, keep working on that. We can try to figure out why there's a discrepancy between what I actually ran, or have been running with paper trading versus this back test. What's the difference? That's another big thing that we could try. What's the discrepancy? Or at
Let's
least
start with
those are two
that.
things I'm thinking of right now. What
Yeah,
else
I
would you do?
think we need to figure that out.
The discrepancy?
Yeah.
I think that's pretty important too. Because if the back test is saying one thing and we're getting another, even though it's better, and that's fantastic that it's better. I love the fact that it's better. Our back test is saying 12%. In reality, we got 45%. I'd say that's pretty positive. But
What
why?
result will you get when you use real money, though?
Yeah, and then what happens with real money, right?
Yeah.
That's what I want to actually do. I'm thinking about setting that up tonight, actually. I think after this call, I'm going to set it up with real money. We'll see what works out, or how that works out. I'm a little nervous to do it because I know the martingale it tends to have those explosions, and I'd kind of like to make sure that we've addressed that. That's my own personal thoughts. Okay, so why don't you guys want to start with that? Let's figure out why the heck this thing is different. Let's start with that. So the one that the Condor strategy is running on, let's see what username am I using here, is on my Grezer account. Regular Tradier. It's my username. And you get code they sent me. Okay. Oh, I didn't even realize I have money here. I funded an account with $100. I forgot about it. Should probably do something with that money. Okay, so here is that account, right? 143,000, 141. Yeah, so it again made money today, right? So it started the day at 141, it's now at 143. This thing is just killer. It just nonstop keeps making money. So let's take a look at the historical trades. We could compare the historical trades that it's been making versus what our back tests assume would have happened. So let's get a data export here. We'll go orders. And let's go over a longer time period, let's say from March 22nd until April 22nd. I think that's what we back tested over. We'll download that. And let's see. So these are trades that are placed. This seems like it's missing a bunch. It's going from 22nd, 18, 16, 12, 10, 8, 4, 2. Seems like it's missing some trades for some reason. Huh.
I always have problems with Tradier not having all my trades in the data export.
Oh, really?
I have a significant amount of trades that are missing when I try to export my data.
Really? What the hell? No way.
Yeah. Like I have months of missing data.
Wow. Okay, that's weird. Why is that the case? Maybe it's because they only do 40 pages of results. Maybe they have some sort of limit on how much you can download. Do you think that maybe that's it?
I was thinking maybe with the paper trading after a certain amount of time they might stop. I don't know. I don't know what the reason is.
Let's see. Why don't I'll sort these. Okay, I'll sort it from March 27. I guess that's when, I don't know why that's the first one. Create a date, let's say transact a date. I guess it's the same thing. This thing started 27th. It looks like it started on the 22nd. Although maybe there was some sort of issues at the beginning. This wouldn't surprise me because when you first run our strategy, sometimes there's some issues when you first start running it. So maybe there's some sort of problems happening here. And it didn't actually start until the 27th. That's possible. But okay, so we have here from the 27th. Let's download this. Let's see if this is the case. If it is a limit to the amount that you download, then sorting it should fix it, I think. Right, because it says sort by transaction date. Let's take a look at it here. Okay, so we take a look at it here. We'll create a date, transact a date. I think that's what it is. So it goes 27, 28, 2, 4, 8. No, it's still missing stuff. What the hell's going on here? 2, 4, 8. It is definitely missing trades. What the hell? Okay. Yeah, maybe that is something to do with paper trading then. I'm not sure. Okay. Either way, we can still take a look at what we have. That doesn't necessarily mean that we can't use what we have there. Let's take all this out. They're all going to be market. They're all going to be good to close or good till canceled. Filled quantity. We don't need both quantities. Status filled. We can keep that. Price is actually quite short. There's only going up to 40. There's only 40 trades here. It's very little. I think that's the reason why. I think it's just like not getting all of them. I think there's like a limit to. Actually, here's another thing that we do. Instead of going from March 22nd to April 22nd, why don't we just go March 22nd to March 30th, right? We do a shorter time frame. Well, it's still missing. What the hell's going on?
Hey, you can check your real account and see if it does the same thing.
Yeah, I can definitely do that. Um, let's see. Actually, that's gonna be a bit of a pain. I'm gonna have to like get my wife's thing. Actually, you know what? Yeah, no, let's do that. But I'm gonna have to go downstairs and talk to my wife, or at least get her phone somehow, because it's technically under her name, the account. Let's see. This is yeah. Okay. Give me 1 second. I'll be right back. I'm gonna get her phone. Be right back. All right. Hey guys. So I got this phone here. Yeah, so there's a question here. Is it always filled at asking price? A bid ask can be quite wide. Um, so yeah, there definitely can be quite large spreads. The spreads on the SPY and SPX are actually a lot better, which is one of the reasons why we use that to trade as opposed to, some small stock or whatever. So there's definitely that. But yeah, there definitely could be spreads. Also, you're saying a butterfly bid ask spread can be quite wide. Actually, I'm starting to think that multi-leg orders are a bad idea with this. So I'm starting to think, just based off of, what happened when we introduced multi-legs, they just historically didn't do very well. And I'm not saying in back testing, I'm saying in real trading, they didn't work. So I wonder there that as well. But I think there's still some more that we need to find out there. And then Tony says, what's classified as a day trade? Day trading refers to buying, then selling, or selling short, then buying the same security on the same day. Just purchasing a security without selling it later that same day would not be considered a day trade. Yeah, so I really wonder why this SPX program, why they say to do that you need $25,000 or $26,000. Okay, let me see here. Where is this thing? Was sent to, should be here. Oh, no, there it is. Okay. Trade or brokerage. Put in the code 996193. 996193. Verify. There we go. Is this the right one? Okay, good. The things actually transferred over, worked. So I'm actually going to sell this while I'm at it. This is my live money account. Review and then sell. Because I want to use this to actually run the martingale. But okay, so let's take a look here. So this one was running the butterfly for I want to say 2 weeks or so. So let's take a look and see if it has missing trades too. $1,045. Yeah, I think there's a difference between paper and real money, guys. Because this actually has, the other one was limited to 40. It didn't matter what date range I chose, it kept saying 40. Whereas this one doesn't seem to have that problem. So it seems that it's a paper trading issue. At least that's what it looks like to me. Do you guys agree with that? A lot of rejected here. Rejected.
I mostly agree. I will say that in my live money account, I'm also missing trades, but it
Oh,
does
really?
seem consistent. Like I have some a little bit further back than I have paper trading, but I'm still missing trades there. My gain loss has stuff back to when I started trading in like February on that account, but my orders, they don't have all my orders from when I started.
Hey,
Interesting.
this may explain why you were losing money, because it seems like all of them were rejected.
Yeah, we definitely had a bug with it for a while. Yes. Yeah, that's what I was wondering at the beginning when we were talking was, I think a big part of the losses is to do with the bug, right? The fact that we set this thing up as multi-leg and things were getting all screwed up. I think that was one of the biggest issues. And yeah, you're right. You could see it here. They're like all rejected, right? Thus, the bug, right? So yes, I agree with you. I think that was a significant factor why that strategy was not doing well.
And so then the only trade that was being sent was when you had bought the QQQ. And I think that's when the stock market was also going down.
No, it wasn't the only trade. it was, one of the trades, but as you can see here, there were others that were filled, right? The SPY, buy to close, like it's not the only one. But there was a bug for sure, 100%. There like how much that bug influenced the drop in the butterfly, I don't know. I removed it right now from the thing because it's buggy. And I'm like, you know what, let's just remove it for now. I don't know if you guys want me to keep it, let me know. I can put it back up. But I removed it because I'm like, this isn't really representative of the strategy, which is why it's not there right now if you check. But if you guys want to see it, let me know. I can put the access back. But yeah, so you can definitely see here. This is the bugs that were happening, right? There are a lot of them were getting rejected as a big part of the problem.
Yeah, so it did not get fixed until the end. And then so by then a lot of damage had been done.
Yes, correct. Absolutely. And even by the end, I still don't think it's fully fixed. I still think there's an issue with it. Because I'm still when I look at the algorithm, like when you go here, you see bot crashed, rejected order, unexpected sell short order. So like there's still crashing happening. So it's still not fully functioning properly.
Yeah, so we need to figure out what the bug is.
Yeah. Well, right now it's saying that this short sell order is a bug. But then I'm also thinking maybe it's not only that. I think maybe using multi-leg in general is a bad idea for this. Because I think maybe the pricing that we're getting for it is just not ideal for whatever reason. Um, I think that's a factor, right? And I only say this because one of our employees was running it and he said he's still up. Although maybe something went wrong with it, and there could be a whole bunch of other things that happened. It's kind of hard to tell. Because Cody actually said the opposite, right? He said that his followed the same pattern, right? So now I'm not sure, right? Um, it's really hard to tell, especially when we can't get all the trade history. You know what I mean? If they're only giving us 40 trades, then that's quite limiting in terms of how we can see what happened, right? But okay, all right. So we looked into that. Now, I guess we could just use the trades that we do have, right? We don't have that many trades, and it seems to be mostly an issue with the paper trading just not being documented correctly. Actually, you know what, Latoya, have you ever reached out to them and asked them why they're missing trades?
No, I didn't. I wasn't sure if it was just a me issue and I really just didn't have time. I will say I just tried what I think Jim put in the chat that I did the free trial of that website and that pulls in all my trades and they link through the API. So I'm wondering if we get the trades through their API, if everything will be in there and maybe their interface is just not as good.
Hmm. Why? I mean, I could sign up to TradesViz right now. Why don't I do that? Let me
So Latoya, is that trade viz actually worth it from what you're
I
seeing?
literally just signed up while we were on the call, so I haven't been able to explore as much as I want to. But I mean, it's a 7-day free trial.
Okay, but it got all your trades.
Yes,
Okay.
yes. It has lots of charts and visualizations to see what was going on. So I'm not sure yet. Maybe.
Okay, maybe.
okay. So let's try it out. It's free. I don't mind testing that. Can you link to multiple accounts, or is it like one thing and one account?
I think when you start the free trial, you can link to multiple accounts, but
It says multiple accounts on the advertisement.
Oh, that's great. Okay, cool, perfect. Okay, so let's see what happens here. So I'll sign up. Enter password minimum of 8 characters. You talking about it was minimum 8 characters. Yeah, autofill it. Maybe the password's too crazy. We'll go like this. We're gonna go none of that. I'll go maybe like 11 characters, 12 characters, 13. Please include an at and email address. Okay. rob@lumiwealth.com. There we go. Save, and then I need to verify this thing. Please confirm. There it is. Okay. So here's TradesViz. Alrighty. Start free trial. Okay. Pro Platinum. Okay, so Pro, we get this. Simulator, replay, advanced pivot grid. I don't think we need any of these technical back testers. I don't think any of this is really valid. $20 charged monthly. That's not too bad, especially if we could link multiple accounts. It's actually pretty decent. Set this up. Then I'm gonna move this to another screen to input my credit card because I don't want this sent to the whole world. So we'll get this over here. Fill this in. Billing address is United States. Okay. Total after trial, $20, 7 days free. Okay. Okay, there we go. So we're in here. Go home, and then how do I link Tradier? Do you know where to go?
If you click on your profile in the top, yeah, go to import export
Okay, cool. Import export.
and
Account
then go up. Because you're on upload file. So go up to where
okay.
it says add
Auto
auto
sync.
connection.
Oh, nice. Awesome. Thank you. It's great. Perfect. Okay. So account one. And then, wow, it really links to a lot of them. Current day orders. Which one did you pick? There's two Tradiers.
Trades history.
Trades history. Okay. Create connection. Okay.
So click on under where it says instructions, visit this link because that's what you're going to use for the API code. They'll give you a code.
Okay. So this is, we're going to this account, right? It was Grizzly, yeah. I think we're already logged in actually. Or what am I logged in as? No, this is my live money account.
I could not link. It didn't successfully link my paper trading. It successfully linked my live trading account.
Oh. Well, that kind of makes sense that it would do that. Maybe it's just not set up to do that. Is there any way that you can link your paper trading, or is that like
It didn't tell me what the error was. It just said it failed. So I'm not sure if it was because it was paper trading or what the issue was.
okay. All right. Well, let me try it out because we're looking for paper trading, right? Like, so if it doesn't work with paper trading, that's, oh, approve access. Read, approve access. Okay. Access code. Paste, copy code, and text your API code. Okay. And the text your API code appears when you click on connect after connecting a trader option.
Glad to see that's a one-time use.
Yeah. Yeah, this would definitely be a security issue if it wasn't.
Yeah, so go back to TradesVids and paste that into there was a
Okay.
box that had where you put your API. It might be on a different tab.
Yeah, what the heck happened to that?
You have like 3 TradesVids tabs open, so it could be on one of the other ones.
Yeah, maybe. Oh, this is no API code, account number ID. I have to get that from Tradier. They really connect to a lot of platforms. Actually, this seems like a very good one to use. Just considering how many they connect to. The access, and this is my account number. Connect. Oh, look, successful. All right. Account 1, sync. Last thing was not successful. Please contact us. Is this what the error that you got, Latoya?
Yes.
Yeah, it was not successful, so you have to contact them.
You did ask you for some dates, a range of dates. I think you skipped over.
But that part was optional.
Okay.
Like for my live, I skipped it and it didn't have a problem syncing.
Think from date. Yeah. Save. Sync. Too many sync failures. Please contact us. Yeah, there's definitely an issue here. Let me write them a quick note. It was support@tradesviz.com. But I guess either way, this is, if it's not working with paper trading, then we could just use the other one. Having issues syncing Tradier paper trading account. Say any ideas, any idea what the issue is? Okay, so I sent them a message. Let's see if they get back to me. But either way, we still have some trades. Again, even though we don't have all of them, we can still kind of go over this here. So why don't I do this? I'll set this up to be data. Set a filter so I could sort by transaction date, descending. So it has all the ones that happened yesterday. So it seems like the more recent ones it actually has. So we can go backwards through this. So let's say these couple trades here. So these are one group for one day. We say this is another group for another. Actually, this is another day right here. We say this is another one right here. Okay, so there you go. So now we have 3 different days we can look at. So see what happened in our. I don't see the sells though. These are supposed to be selling the next day. That doesn't seem to be happening. Well, actually, no. With the martingale, I think we hold until expiration, right? So there shouldn't be any sells. Actually, yeah. So this shouldn't validate PDT because we hold until expiration. We actually don't even sell these things. We just let them expire. So that really should not violate PDT. I feel like you could run this with a small account. Like I don't see why not. But okay, so here is. Let's take a look at the back test. Or was time period? This is that time period. Yeah, March 22nd to April 19th. I don't know why it stopped at the 19th. But that's okay. We could say here. Okay. There's pretty wild swings in the value of this portfolio. Let's say, okay, this is the 18th. So we had these orders go through on the 18th, and then we had these orders go through on the 19th. Okay. So here's the 18th. So on the 18th, we had 4 orders. This is remaining quantity, reason. Let's just get rid of all this so it's a little easier to read. What else can I get rid of? Filled. I don't think we need that column. So they've all been filled. There actually were no rejections, so that's good. There's no issues with this one in that respect. Okay, and make it a little larger for you guys to see. So on the 18th, we put through these 4 orders. Okay, 506 call, 507 call. Let's see. This is a 510 call and a 515 call. That's quite different. Well, actually, I wonder if there's we back test this. I don't think we change this. Wing size, no. We need to actually make some adjustments. Strike step size should be 1. Those are actually things we need to change back. Okay, I need to rerun this back test. On the SPY, there's actually a discrepancy there. That makes sense because that's actually different code. Let me confirm that everything else is the same too, actually, before we do this. So days expiry 1, strike step size 1, wing size 1, 1. Start seek steps 2, delta required 14, pause after loss, and the other one 0. Quantities to trade 81.8640. Time, same time, 14 to, okay. The code itself is a little different because we made it work with an asset as opposed to a symbol, but I don't know if that's going to matter much. Yeah, okay, I think I got the result here. This actually looks a lot more like what we did. No, wait, this is for IWM. I'm seeing this on my screen here. IWM is looking really good, actually. By the way, let me run this. In the meantime, I'll show you guys the IWM results. These are all the results on the IWM. It was up 500% over a time period, 53% a year. A little bit more correlated to the benchmark for some reason. That's okay. 100% drawdown. It would have blown up at some point, though. I guess that's a pretty big issue. At least according to his back test. Big volatility. Yeah, it had like these wild swings. This is around COVID. IWM might have blown up around COVID. So it touched negative 100%. Okay. Let's see what would have happened with SPY. I'm running this right now. It's gonna be done in a few minutes, or probably a few seconds. Yeah, 30 seconds. Let's see what happened with this one. 22 seconds. Okay. This actually looks almost identical to what actually happened. So this now makes more sense. This is the graph over this time period. It's basically a straight line up. This actually makes sense. This is almost exactly the same thing that happened in our paper trading. So there actually is not a discrepancy here. So it seems like I put in the wrong inputs. Because if we're comparing it, but we can still look at kind of the details. This is up 44%. This is up 51%. That's still slightly different.
Hey, Robert, on your trade quantities, what was that in that graph or in that table?
We mean trade quantities.
For each Iron Condor trade that you put on, how many contracts did you trade?
301. So scaled it to the size of this account, right? Because it's a $100,000 account.
Okay.
So it took that 80, multiplied it. So it's a little less than 100, I think, actually. But say
Okay.
scales for 25,000 accounts. So we'll take 100,000 divided by 25,000, which is 4, right? Times 80. 4 times 80. 320. And this is
Okay.
actually slightly less than $100,000 account. I think it was like 95,000 or something like that. So that's where we
Okay.
won from.
Okay. And then did you for all these trades, they were a quantity of 300 or 301?
Yeah.
We
All scaled the same.
okay. So we never adjusted them for the trade table. You know,
For
if you had a winner or a loss.
well, it looks like there were no losses. This is just winning every single day.
Okay.
Yeah.
Yeah, it'd be interesting to see over that period what that did. This is SPY.
Yeah, this is SPY.
Okay.
Yeah. So let's while we kind of contemplate all this stuff, let me take this exact same setup and I'm gonna go back further. I'm gonna back test it further back. So we'll go from, let's say 23 March. We'll back test over that time. So over a year. Because this actually, maybe this is just a very good month for this strategy. That is possible. It does, I mean, back testing we show that it actually does do quite well in the long run. But it might also just be this month was particularly very good. Right? Because where's that back test again? Where'd that go? Oh, there it is. Okay. Yeah, because it's up 51% in a month, which is pretty close to what we have, right? We have when it was paper trading 44%, but then again, it was up today even further. So 51% versus 44%. That's pretty damn close.
Is that on the latest code in the repo?
I
Code base.
can update the repo right now to have this latest code. So let's go Condor Martingale. Yeah, because I changed a few things here. SPX.
Now, for the not the Condor, but for did the butterfly show any kind of errors when it tried to place trades on the paper account?
The Condor?
Not the Condor, but
Butterfly.
But the butterfly, did it show any
Butterfly
errors
has tons of errors. Yeah. I think
on the
one of the
paper
issues.
on the paper trading?
Yes, correct. Yeah, you can
Okay.
see it. And when you go into here, this I was showing earlier, bot crashed,
Okay,
rejected,
I see.
it's short sell order.
Yeah.
It's having that error every single day.
I think I'm gonna try I'm gonna try to deploy real capital in the Condor, the
The martingale, yeah.
the martingale. I'm curious on that.
Yeah, I'm pretty curious in it too. I'm thinking about putting some real money into this as well. Although this next back test that comes out is gonna say a lot about that too. The one thing is I'm thinking maybe a different schedule would make sense. Like we tested that different schedule with SPX last week, right? It had more layers to it, and kind of a key to it was that the first layer, and Tony, you weren't here for this, but I forget the guy's name that was doing this. But basically he gave us a schedule. And the thing that these guys are doing was the first day was a 0, right? Here we put 1 because 0 doesn't actually work with what we're doing. So we trade 1 contract the first day. But basically, this is kind of one of the main things that made it less likely to blow up. So I'd actually be curious to see with this different schedule, 120, 50, da da da. Why don't we run that as well? Because having more layers, I think, has a much higher probability that this thing will be persistent. Because so 80, 180, 640, what's the chance of us losing 3 times in a row? That's quite a bit higher than the chance of it losing 5 times in a row. Or, yeah, 5 times in a row. Right? And especially if the first one is a 0, I think that's kind of the main thing that they're doing. Right? So I'm back testing both of these right now. Let's see how they compare. But it's definitely a good sign that our back test matches what happened in paper trading. I'd say that is a very good start here. It's doing very well in paper trading. We've back tested it, worked out very well in back testing, and all this stuff is matching. So next step is going to be, live money, which again, I think I'm going to run live money with it tonight. I see that you guys wrote some stuff, so I'm just seeing that now. Cody says, have to draw for evening. Good night. Good night, Cody. Hopefully you heard that. You wrote that a while ago. You probably actually missed that. Ali says, sounds like we can compare your employees' results with these results in a lot more detail to find out what each differences are. Yeah, I agree. I'm definitely going to look into that. Also, the differences in the codes. Also, if she is using a broker other than Tradier, that may be a factor. No, it is Tradier. I've heard some wild things about issues with Tradier. What issues have you heard with Tradier, by the way, Ellie? I'd be interested to hear that. But
Yeah. Trader actually, in terms of the trade, actually, if you ask Chat GDP, that tells you a lot. Compare with TradeStation. It says that their execution is slower, their liquidity issues, things like that. So you're a lot better off going with interactive brokers, or especially for these trades that need to be executed really fast, real time, and you need a lot of liquidity and stuff. They are not really a top broker for this kind of trades. And I did a lot of research on that, and that's why. And my trades, I'm doing some other stuff that's also needs to be executed fast, and it's not. I mean, a lot of trades get rejected. That needs and a lot of things that paper trading gets amazing results when you with Trader, when you go into actually the trading, the live trading, you get your trades rejected. So I'm trying some stuff now. I haven't done it yet, but with TradeStation, I'm trying to just compare the results. But in terms of actually doing research on that, they are saying TradeStation is a lot better in terms of execution. So actually, you don't get rejected you in the spreads. So
Yeah,
that's
that doesn't surprise me that there's better execution, but I actually don't think we need very good execution for what we're doing. We're trading the SPY, and it's not like it doesn't matter if it's like executed on the second. Like if it executes like 30 seconds or a minute later, I'm actually not very concerned about that personally, because we're not day trading this thing in the sense that I don't care if it moves on me a little bit, right? What matters is that we hold it for the day. That's really what we're making. We're making money off of 24 hours of change rather than that we're trying to, place trades as as frequently as possible. So I actually don't really care too much that it's bad execution.
so if this if you are holding to expiration every time, then that's a different story. But
Mhm.
for certain trades that you closing, like for that butterfly, I think you're closing some trades, right? You're trying
Yeah,
for
the
the butterfly.
butterfly might be more important,
Yeah.
maybe.
So for that's the one you're talking about, that you're saying that that one is not executing that way, because that's one you're trying to close and just turn it to condor and things like that. So you need you need fast execution. So for those, I think that maybe that it might not be an issue. You may be right, but I'm saying essentially for these kinds of trades, they're saying trader is not the ideal broker. And I'm trying to find out myself too. So I don't know for sure. So I'm just saying this is what I'm looking at. So
Yeah,
Okay.
there are better brokers than Tradier for sure, but there's the issue is what functions we have supported in Lumibot, right? And so, and I looked into interactive brokers, it was last week or week before. I'm forgetting what are we, it's absurdly complicated API. Remind me what we're missing in for being able to run these strategies, option strategies with interactive brokers.
You can run it with interactive brokers. The only problem with interactive brokers is that they force log you out every 24 hours.
right.
So first of all, you have to run this with TWS at the same time.
That's right.
But that's something. Sorry?
Yeah, I'm remembering now. Yeah. So yeah, in fact,
Yeah.
I shared that bit because that was a surprising thing. Yeah. So there's the whole issue with the keeping the auth going.
Yeah, because it keeps logging you out. I mean, you have to have TWS running at the same time, but that's actually something you could get around because you could run Gateway instead of TWS. It's a headless version of TWS, is a Gateway. And you could run that in the cloud and you could actually do that. But the problem is that they kick you out every 24 hours.
Rob, I'm not sure if Gateway does that. I think
No?
TWS does that. Gateway, I think, keeps you logged in.
Really?
Yes, because I had it over the weekend actually, and it kept me logged in. So you might want to look. I can't guarantee that, but I think that's the difference between TWS and Gateway. Gateway is supposed to be continuous. I think that's something that you might want to look into also.
Yeah,
Okay.
and I've heard and we've heard differing reports about people about their experience. So I think this also has to do with whether you have any kind of keep alive running and this kind of thing. And because the 24-hour thing is manageable, right? It's not terrible idea that you got to check on things at least once a day.
Yeah, I mean you could do it. It's just it's a
That
pain.
it was
I don't know about you, but I hate doing stuff like that. It forces me to log in every 24 hours.
But the
You can get
Gateway,
around, like it's not like a game changer. I agree with that.
So because the thing that the concerning issues were people were saying that it won't even you can't even rely on it to stay logged in for 24 hours. That's a concern. But like I say, I'm suspecting that has to do with inactivity, which is a separate issue.
No, it does have some times where it disconnects. Like even if you turn on TWS, it like disconnects throughout the day sometimes.
that's true for TWS, but I think for Gateway it's continuous. Based on everything that I remember about it, and actually last weekend I was running some stuff, and I remember on Monday I came back and it was still connected. So
Yeah, no,
uh,
I don't mean that. I don't mean that, Ali. What I mean is that when you run TWS, it's not that like it forces that's one thing is it force logs you out every 24 hours. And I'd love to try that, by the way. Actually, I'll download T Gateway right now just to test that out, because that sounds interactive brokers gateway, but that's not what I mean. What I mean is if you leave TWS running for a bit, you'll hear it like broker connection lost, broker connection reestablished. It's like it seems to have like some sort of issues with connections every once in a while. So if you're
That's
using
not that's not a problem if it doesn't require manual reauthorization.
these are two separate issues. I'm not talking about manual reauthorization right now. I'm talking about that it just drops the connection.
Oh yeah,
Yeah.
those yeah.
Get it back.
I haven't seen that recently. Yeah, I know this was happening a couple of years ago, but recently they've gotten better with that. Because I've been running some stuff. It hasn't happened recently. We have a good internet connection, but yeah, I know what you mean. They had these issues before because they're trying to compete too, and there are all these smaller players that they're doing better than them, and so people are closing their accounts. So they've been trying to improve those things too.
That's good.
Yeah.
I'm happy
And
to hear that.
as long as it reestablishes, that's not a big deal. Right? I mean, that's
Does
what software
reestablish.
for.
Yeah, but still, like you're in the middle of day trading something.
Yeah,
It can get in the
instead of
way.
break everything, yeah, that's not good.
Yeah.
And TradeStation is also. Do you guys work with TradeStation, by the way? Do you support it yet?
We don't currently support it. I've looked into it before. TradeStation is a good broker. I've heard this from multiple people. The first of all, we'd have to connect to them, right? We'd actually have to create the connection to TradeStation, which would take quite a large effort. If you guys want to help with that, by all means, we can do that, right? It's just a lot of work, right? But then number two is getting an API key from TradeStation is quite a hassle. Like I've gotten one from them, but it literally took me weeks to get an API key from them.
Oh.
I don't know if that's intentional. Maybe I think there's probably ways to get around that. Like if you use OAuth with them, then there's a different thing, but then that means we'd have to connect to it differently. I think there's ways to fix that. But the main thing is that, we have to build a connection to them, that there's actual like, things we have to do, right?
I see. Okay.
Yeah.
So
And I actually
yeah,
asked about why we're not using Alpaca, and that's because they don't have options. And I was going to add Limibot support for their paper options, but then when it turned out right now, even the paper options only do L2. So that wouldn't even run these strategies, which they need L3.
Wow, it's surprising. Yeah, I see it. You just wrote that they don't do level 3 options. That's pretty surprising.
That's why I was digging in. That's why I was then looking at interactive brokers, because Alpaca is very nice and good value for all in one package, but no options yet. And like I say, and so it'll be at least months, if not longer, before they have live L3 options, right? It could be, maybe it won't even be this year, right?
Yeah, so with level 3, I mean, I don't think it's a technical issue. This actually surprises me that they don't have it in paper trading, because I don't see why, from a technical standpoint, they wouldn't allow level 3 options trading. Maybe actually, I know, no, I take that back. Maybe they haven't implemented like margin yet. So you have to do margin calculations and things like that for level 3. Level 1 and 2, I think is just, I don't think you need margin for either one of those. Correct me if I'm wrong. Level 1 is buying calls and puts. Level 2 is, I think, spreads. Level 3 is condors and butterflies. Yeah, so Avinash, you're saying regulatory standpoint, but this is paper trading, right? So why would that matter? Like there are no regulations, right? So yeah.
Usually for paper trade, they give you the same privilege that you have for your regular account. Usually it matches the way depends on broker, I guess, but I know interactive broker and stuff that way. Whatever you have for your regular account, they give you the same thing for paper trade.
Yeah, I get that, but
the Alpaca options, they call L1 sell a covered call or sell a cash secured put.
Yes, it's
And
cash.
L2 they call buy a call, buy a put.
Oh, really? So level
Yes,
2 is buying.
just buy. You can do short. Correct. And
Okay.
then I think that level 2 you can also do like spreads. You can do like
Yeah.
so for like IRAs you can do level 2, so you can do spreads too.
Yeah, yeah. Actually, IRA, actually, I guess it depends on the type of IRA. I have a rollover IRA. They let me do level 3.
Oh, is that right? Wow.
Yeah. Well, at least Tradier did. I have a rollover IRA. The account that I showed you, a live account, that's a rollover IRA. And they're letting me do level 3s, which is butterflies and condors.
Yeah.
Yeah, level 3 is spreads and butterfly. Oh, and spreads too. Interesting. Okay. Have a good night, Gil.
I mean, if the alpaca paper options will work for these strategies, I would be more inclined, although to my big list of to-dos, but I would add it. But right, we're missing something, right? To do these strategies
What do you mean?
with alpaca.
We're missing something. You mean
Well, we're missing options, but also
level 3 options?
there is a drawback with Alpaca. You have to pay for data with them. I think it's around 100 a month for their data feed.
Well, you get everything for 100 a month. I mean, I think it's a very good package deal.
Yeah, but you don't need that. You can still get delayed data. You don't have to pay $100 a month. Like I have accounts running without that $100 a month. It's there's limitations on it, right? Like if you look at alpaca pricing, you don't actually have to pay for that. So go here, pricing and fees, where alpaca markets, where is their pricing? Individuals, developers. Where the heck is this? Why is it so hard to find their pricing? But I was looking this up the other day, and you don't need to pay for that $100 a month. $100 a month is only like when you have like a lot of API calls and you need, actually, I think even real-time data you might get for free.
No,
But you
it's
definitely
not.
do.
So
Okay.
that's why I pay for the data, the news feed, and all that kind of stuff. But my question is on the options trading. So we talked about this a couple weeks ago, and if I want to make sure I'm correct in having concluded that these strategies need features they're not even supporting in their current paper API.
Yeah, we definitely need level 3. That is correct.
Right. It's not just a terminology. There was some point there was like somebody was talking about, or maybe just different terminology, but there's some missing features needed in their API.
I think so.
Okay.
That's if I'm interpreting you correctly and you're interpreting that correctly, then yes, that's what it sounds like.
Yeah. So what are those? So what are those trades? The trades needed for that were you were saying about spreads? Those are specific kind of
Yeah, spreads and condors. Yeah.
Yeah,
That's
I'm
what we're
looking at
doing. We're
the
doing- yeah.
yeah, I'm looking at the API spec for Alpaca, and it only does level 2. So
Yeah, that's what I was reading from. Yeah, but my question was this a terminology thing? Is there
no,
something in
no,
No, this is
no.
actually
You got to
what we
do level 3. You got to be able to sell a uncovered call and sell a uncovered put.
Yeah, yeah, right. So that's the L3 is so because right, because you can only sell a covered call, right? So you can't sell
Yeah, so you can't do an iron condor on margin or via level 3.
Yeah,
yeah. That's what I thought. Yeah.
yeah, exactly. Yeah. Well, I mean, let's see how long it takes for him to add that. They seem to be very quick, these people. I'm actually very impressed by the speed of development at Alpaca. These guys move very quickly. I wouldn't be surprised if this changes in a few weeks.
Well, so the beta, I was in the beta. I'll never started running it. That was back in January, so it's 3 months. So it's perfectly fine beta period. But like I said, for adding new features, it could be a while. Right? So
Yeah. Yeah, who knows? right? I think it'd be if we want to know that we should reach out to them. I think it's the best way to find out, right? Yeah, I really like Alpaca as a broker personally. I'm a big fan of theirs. I think they do great stock trading. They do great crypto trading. They've really improved their API over the years. They have a great interface. I'm a big fan of Alpaca across the board. So I would definitely support the adding of options to them. But you know, if you want to run these strategies, we definitely need level 3. That is, you know, unequivocally the case. Yeah. Okay. All right. So I ran these back tests, by the way. So here's our back tests. This is from March 22nd to April 19th. So I'm seeing this. So what it seems like to me is that we've been in one of these periods where we've had a nice upward trend for a while, right? We had another one that extended for quite some time. These trends can go for quite a while, but we do have these big dips to happen, right? This is the biggest problem with the martingale, is that it does have these explosions every once in a while. Now, I think dealing with that is important. What is this? This is on SPY 14. This is a different, this is the 120.50. Yeah, this isn't taking enough leverage, but the drawdown is quite low, right? This is like a much more stable type thing. So I think using this what do we call it? Like this sequence, right, would be better, right? Because here we have, what was this? This is an 8% drawdown, and we're getting an 8% return. Here we have a 73% drawdown. That's quite significant, right? So be aware that if you're running this, this could have pretty big drawdowns in its current state. But the returns overall are quite nice, right? It's 100% a year, 108% a year. I'd say it's a pretty nice result, right? Just the drawdowns are very high. So in order to change that, what I've noticed in the past is this schedule seems to be kind of the most important thing. So I think it would make sense to play around with the schedule. We did the 120.50, this one, right? If we did a 140, 100, 300, something like that. This is 490. I don't even know if we'd be able to do this. 900. I don't even know if the broker would let us do that. Right? We could do something like that, which should theoretically double the returns here from 8% to 16%. Yeah, and then this kind of looks a little bit odd because this again isn't matching. You know, what we were working on last week was really trying to match that graph. Right? This is the graph that was sent to us, right? Like I'd really love to just match this personally, right? But what do you guys think? Where would you want to go from here? So we back tested it. So just to summarize, we back tested it. It worked the same as we expected. The back test matches pretty much what we got in paper trading. Yeah. Where is that? Yeah, here's the paper trading. It pretty much matches, right? But then when you go further back, you see that that's here. I got too many browsers open.
Yeah, I mean, those Rob, those drawdowns happen once every few months anyway. So this 1 month that we have done it, you have it for 1 month, right? This
Yeah.
So this is just one of those nice months that you can see in the longer term back test that you've done. So you have some periods that you keep on going very nicely, and then suddenly you have, it's like a reverse jackpot, right? I mean, when you do jackpot, you keep losing, and then all of a sudden you go up, and this is the reverse of that. You keep
Right.
slowly going up, and then suddenly drops. So it's basically we just gotta come up with a way to. The other one that you were showing that other people you said had done, so that it just comes back right away back. That's really intriguing. So if we could do something like, yeah, these, how do they do that? Because that's amazing. If you could do that, because I don't care if it's just like a few days goes down and then come back. I don't know how. I mean, if it's just 1 day or 2 days, it drops and then comes back. Who cares about that, right? If you know it's gonna come back in a couple of days, that's nobody has an issue with that. The problem is if it drops and you don't know how long it's gonna take for it to come back, or maybe the next day it drops again, right? That would be
Right.
an issue. But this, I mean, if we could replicate this, find out how they coded this, and we do, I think that would be the best, because what we have for 1 month, it's what we have for the back test too. It's just we got one of those periods that just we just caught that part of it that we got lucky, right? Basically. So, but this is I would think this will be something great to try to figure out how they did it and do the same thing.
Yeah.
Yeah, I
Robert,
agree. I very much.
is this data here on SPX?
Yeah, this is on SPX. So there's a couple of differences here. So if you want me to explain the reason why this is happening, is there's quite a few differences. They're doing it on the SPX as opposed to SPY. They're doing a 22 delta. We're doing a 14. And their schedule is made as such to be like it doubles up. So when it wins back everything and plus some, right? That's why you see this pattern where it dips and then pops back up again. Right? It's one loss, two loss, three loss. But then when you win here, it makes enough to make up for all that loss and then some. That's what's happening here. It's a martingale, essentially. Right? That's what a martingale is. So you'd want to explore this a little. I actually kind of agree with that. I kind of want to do that. What do the rest of you guys think?
And then Robert, you got the data for this, like for SPX, to back test it. Like
Yeah, we now have SPX data. We got it last week, so we actually can do this now.
I guess if we have confidence that it's going to go back up, but it's kind of hard to stomach on the other graph if you start your account on the day before it goes down, and let's say you start off with 50,000, then all of a sudden you have 5,000. It's kind of hard to.
But
yeah.
That would definitely be scary.
You have to have several losses in a row. You don't lose that much in any one day.
Well, it could be 1 day, it could be 5 days. All I know, I start off with 50 on a Monday, and on a Friday, I got 5,000. I'm not happy.
Yeah, I
And
definitely be
there's
happy
no
with that.
guarantee that it comes back up like it has in the graphs.
Well, so that's why, like I say, so I have to ask, dumb questions like, well, why are we sticking with, multi-day losses, right? I mean, so that's what, and I'm forgetting the guy's name, right? So one of the key things they talked about is they skip L1, right? You don't start on until until there's a winning day that you did not buy or sell, whatever you did not trade on. Then you start in L2. And so then on the other end, I asked the same kind of questions. If you had a loss or two losses in a row, what can we ask about the market conditions, to go back to that thing? Let's wait for a winning day and then start trading.
Well, I think we tried that already. So we did different days, and we saw that we were able to win, to make more money when we would trade every day instead of like on certain days. So that's why we're trading on every day.
Well, there's details to that, right? Because it's like, are we trading every day? Like, what are the days that we're skipping, right? Like, are we skipping it based on some news event? Are we skipping it based off of some indicator? Are we skipping it based off of, you know,
Volatility.
yeah, there's a lot of details to it, right? Um, so I do think if we could somehow increase the probability and reduce this drawdown, I think that'd be very interesting.
So we can look at the days where we had the drawdown and look at the technical indicators, either the news stories, to see what was going on. And then we can refine the algorithm to minimize the drawdown.
Well, also technicals on the option prices themselves, right? I mean, was there really no indication in the options prices in the days leading up to the losses?
Yeah, I wonder. Maybe volatility spiked, or maybe volatility is too low, or maybe some other something, maybe the put to call ratio. Like there's a bunch of stuff that we could look at, you know.
Yeah, because that's what I mean. That's presumably that's what that's why the options are supposed to be such big brains, right? They're supposed to have the collective knowledge of all the people thinking about what's going to happen to the price this next week, right? So,
right. Yeah, definitely.
Yeah, one thing is I don't know if you guys they already done something like that, but if you tie it to VIX, the days that VIX are very higher than, say, I don't know, 20, 25 or something like that percent, a lot of people just don't trade those days. So I don't know if any of these look at VIX at all, any of the trades.
So we didn't look at VIX per se, but what we did do is we looked at the implied volatility
Oh, I
on
see.
the underlying, which is almost the same thing, not exactly the same thing. The VIX, if you know the details behind it, it's basically that, but like with different time periods and a whole bunch of different things. But we're just looking at the implied volatility of the at the money call for that day.
Okay,
Right?
so if it's higher than certain amount, you don't trade.
Yeah, we experimented with that. Yes.
Okay. So are you using in this back test at all?
Let me see here. If it's
Because that could
gamers.
actually, if you eliminate, at least try eliminating the days that are either implied volatility is very high or VIX is very high, you can eliminate some of these spikes, because some of these spikes happen when VIX, because VIX sometimes starts going high and then spikes all of a sudden. So if you just eliminate those days, that could take off some of them at least. And then
Yeah.
you can go back and see in what day these spikes happened, and then go check the VIX and also check the implied volatility and see which one is a better indicator, or maybe using both would be better. And we gotta, I mean, a lot of these things we can get into a little bit more detail and look at the data of, because we have the dates, right? We can figure out those dates that these things happen, and then go back and see how we could have prevented them in the code,
Yeah.
and do something like that. Because
Yeah.
all of these dates can be determined, and then that would be great for the. It's a good way to tell if there is any way to tell. If there is, if it's completely random, that's also a possibility. But I think those are the days. I think these look like the days that something happened that had to do with weeks and volatility and things like that.
I know we had did a project a while back where we had fed the information into the OpenAI API to ask it if we think it's going to, if a stock is going to go up or down. I think it was like 5% up or down. We can do something like that.
Yeah, we could. We could definitely try something along those lines.
yeah, so I am working on AI sentiment. That's exactly how I got in here. But it's a long ways from being really helpful here, I think. The yeah, the right now, the stuff that's been shown to be good for is basically deciding relevance for a particular stock, that, if it's good news, bad news. Although as it turns out, over a long period of time, the only thing you can reliably do when a company's mentioned in the headlines is to short them. Lacking a rumor feed, we're just stuck with the news.
Well, rumor is like Twitter or something like that, right? That's kind of the
No,
rumor.
that's the news, has been for years. Well, Bloomberg and the Wall Street Boys, they've been trading on every social media since the day it came out. Like everybody's kind of pissed off that Elon raised the prices for the feed to insane levels, but it used to be practically free.
Yeah, it was. I used to use it back in the day.
But yeah, Twitter is the news now. That's why business news is pretty shitty in comparison.
I agree with that. Yeah, definitely.
That's what we have to.
Twitter is much more up to date. And,
we
yeah.
have to work with. But this it's I ran a 4-year back test on this thing, and you can it across the time it showed this average back test at 1% per, just a single day, 1 day hold time trades, and do 1% per trade on average.
Yeah, it makes sense. By the way, oh yeah, have a good night, Tony. Cheers. Avinash, you're asking some stuff. By the way, Avinash, you're asking me directly. I don't know if you realize this, but you're sending me direct messages. So other people can't see your comments. So just so you know that if you send to everybody, then people have been kind of commenting back and forth. But Avinash wrote, there should be a ways to place a shutdown trigger if account size goes below a certain level. Yeah, we could definitely do something like that. Yeah, no problem, Avinash. I just wanted you, like, I don't care personally, but I just wanted you to know because other people can't read your stuff. And you also sent that one direct message too. But yeah, so it should be a shutdown if account drops below a certain level. We can definitely put in something like that. Prop firms will allow below 10%. That makes a lot of sense. Yep, that's definitely something that we could put in. Event days can be avoided. Yes, we've talked about that as well, that when there's certain events like that's actually one thing too, is like if Jay Powell's coming up on stage or whatever, then we can avoid those days. Although, then we also get into like, what are event days, and those that can get kind of complicated. I think AI probably has a better chance at doing something like that.
Yeah, so that's why I'm working with this. I was
Yeah.
really excited. Latoya brought in that neural forecast notebook, and I'm trying to sort out how to get that working for the walk forward forecasting. So hop into so Robert just made that channel on the Discord, and we're also going to it looks like we're going to have a meeting this week on Thursday evening, and see if we can get that move that ahead.
Very cool. Awesome. I'm glad you guys are getting together and talking about this stuff. Yeah, I guess you guys have been going back and forth. Oh, I don't know. Maybe you guys are doing private messages, but okay.
For the Fed dates and stuff, I think there are APIs that easily you can get those.
Yeah, we could definitely get that. But the point is that that's not the only news. You know what I mean? Like that's not the only event day, right? Like lately, that's been very important. But in the past, there have been many other things that have affected the market conditions, right? Like, sure, we can get Fed days. We could plug that in, no problem. We could definitely get that. But I think that's only really mattered in the past 2 years, really. Before that, it didn't really matter. And it's not even just the Fed days. It's like, well, what days do they announce inflation and all kind of stuff? But again, that's only the past 2 years, because that's been kind of the main thing that's been driving the market is inflation expectations and the Fed. That's been really only the past 2 years. But prior to that, there are many other things that are driving the market. And I'm sure in the future, we're going to have many other things driving the market too.
Yeah. If you want to count everything, then you won't trade at all.
Right.
But I mean, we can. These are all the things to experiment with to see what gives us the best results. I mean, a lot of these things are just part of the process of coming up with optimize to clean the code, basically.
Yeah. Absolutely.
eliminate these issues to finally get to, like, these guys that did this, Gene Simmons. That's all they did basically. They had a huge team that they were doing all these experiments, and they just optimized their code until they got this thing to generate those results. So basically, clean up the noise in the results. So.
Yep. Yeah, definitely. I agree with that.
Another thing we could try instead of volatility is there's a thing called volatility percentile, or IV percentile, excuse me. That would be a different metric that could be worth a shot.
IV metric?
Yeah, IV percentile. It basically says how high is the IV in relation to where it's been over the past year. So it might be a little bit
IV rank.
more accurate.
Hmm.
You mean IV rank?
IB rank, yeah, I like it better than IV rank, but that's another metric. But I think IV percentile is the best way to approach something like that.
Okay, so here's IV percentile, IV rank. Well, Tesla's at the top of the list. Not that surprising. Yeah, so Tesla's way up there. What I think is actually interesting, I suspect that we probably want to invest at times when IV is high rather than when IV is low.
Right.
Because when IV is high, we're getting better option premiums and we could increase. Actually, here's something that we talked about in the past. That's a different variable. We've talked about this, and we did this with the butterfly, where we actually can dynamically change the delta. That's something we've discussed in the past. We've never actually built it. But what if, here we're using a fixed 14 delta. What if that changes based off of market conditions, right? Like if we have high implied vol, we increase that delta or decrease the delta, which basically makes the condor bigger, right? And then when things are going well and things are, implied volatility is low, we can make that smaller and make more money, right? That's another thing that we could try out too.
Yeah, absolutely. Yeah, either IV rank or IV percentile, those things are good ways to tell you how to. Yeah, I mean, you want to have a high IV rank basically for when you're selling. So with Condor Butterfly, basically you're selling. The other ones are insurance. The other ones that you're buying are insurance basically, but you're selling, so you want very high. The higher the better. And then wide, yeah, you're gonna go wider. Yeah, I mean those are those optimizes basically what you get.
Yeah. So by the way, I ran some more back tests while we were talking. I don't know if you guys noticed I was doing this. Because I thought this would be pretty easy to do. And I was just like, I've noticed that changing this schedule seems to make a really big difference. So I ran this one. This is a schedule. The one that we talked about last week is a 140, da, da, da. But last week we did 120, 50, whatever. And I just basically doubled everything across the board. And we got results like this. This is actually a much lower drawdown. We have a drawdown of 14%. But also we're not getting this crazy return. We're not getting, super high, but it is kind of seeing a graph that looks more like that one that I was showing you guys. So this graph here, by the way, oh, there's Jim White. Perfect. You guys are talking about this. This graph here is on the SPX, right? And they're basically doing this specific schedule on SPX. We're doing the SPY here. So maybe I'll run this on the SPX and run that specific schedule. But I think we'd have to do this with, because we weren't able to do the zero. So I would have to go larger account to kind of make up for the fact that we can't do a 0. Let me actually try that. I feel like that's an interesting test to run. We'll make this a $200,000 account, let's say. I'm not saying that we will have to do this, but if this works, then that's very telling, and we'll say, okay, well, then we need to change how this thing works so we can actually do the 0. So let me run this based on what we got last week. This is the SPX is 125. This should have been on 25K. Is on 25K. So if we want to go to 200, then we can actually run this. Let me see. Go 1, and then 200 is what, 4 times, 8 times. So 16. And then 40. And was 15 times 8. Not as
Can you,
good at math as I used to be.
bro, can you explain what this schedule is? I'm sorry, I missed the other one. Just quickly explain this.
Sure. So basically, this schedule is what happens when you lose. So martingale, the way that you play in martingale, and actually, hold on, let me first finish this up so I could run it. I'll explain to you as soon as it's running.
Great.
So I kind of want to get that moving. 360. So 116.40. So that's times 8 times 8. Okay, that sounds about right on 200K. Right, SPX, and then we also want to change this to be SPX, and then we also want the wing size to be 5, and we want the strike step size to be 5. I think that's how we did it. Start seek steps. Okay, let me run this here. Okay, so so the step sizes. So do you know how martingale works? You ever heard of martingales? Do you know what that is?
A little bit, yes.
Yeah. So martingale comes from the gambling world. So they say, and I actually use this all the time personally. Whenever I go to a casino, I use a martingale because it's like the easiest way to win. It gets a little scary, but it's pretty easy to win money using it. Let's say you go play roulette. The idea is that you'd put down on either red or black, anything that's 50-50, odd, even, red, black, pick whatever, okay? The first bet you're going to make is the minimum that you have to put on, okay? What is the bare minimum, okay? And then if you win, so let's say it's 20 bucks. Let's say the minimum is 20 bucks. If you win, you take your 20 bucks and you put down another 20. Or I guess you'll now have 40. You'll take your 20 and you'll keep 20 there, right? So that's when you win. When you lose, you have to double up, okay? So that you lost your 20, now you have to put down 40, okay? Let's say you lose again, you have to put down 80. If you lose again, you have to put down 160. If you lose again, you put down 320. And you keep doubling up, okay? You keep doubling until you win, okay? And when you win, you will make enough money to pay for all of your losses plus a win of the minimum amount they put down. So let's say I put down 20 bucks, I lose. I put down 40 bucks. Now I win. Now my 40 bucks turns into 80. That makes up for all my losses. Plus I win a $20 on top of that. Does that make sense? Right? Because I won $40. I lost 20 previously. So now I
Yes.
win 40. So
Yes, makes sense.
yeah,
Yeah, absolutely.
okay.
Actually,
And
it's a
then
very
when
good
you
idea. Yeah,
and then when you win, you go back down to the minimum again.
yeah.
You go back down to 20.
For this condor, actually, it's a very good idea because it's very unlikely. It can happen, but it's very unlikely that you get this drawdown twice in a row. So
Correct.
basically, you make up for it when you do that. Oh, I see. I got it
Yeah.
now. Okay, great,
Yeah.
great.
So the idea is that it's very unlikely that you're going to lose that many times in a row. So that's why you keep doing this double up type thing.
I got it. Okay,
Right.
cool. So how do you do? So this schedule, how does that work?
So this schedule is from this company inside options that basically does this, right? They do this martingale strategy. This is, got to get rid of that. Screw that one up. This martingale strategy, basically they did the math on it and said, well, how much should you put each time? So here it's like, okay, initially you put down one contract. Okay. If you lose, you put down 16. If you lose again, you put down 40. If you lose again, you put down 120. Right? This is the schedule that they came up with that would win you back all of your losses and bring you back up to. That's why you have this like very steady looking graph. Right? Like when we first showed this,
Okay.
where is that? It looks like this, right? Very steady looking graph, or like this, very steady looking graph, because you're basically winning, 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 and then you lost. Okay, you lost again. Okay, then you've doubled down, and when you win, you make up for all of your losses and you go back up again. All right, and you win, then you lose, 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 but then you double up as you're losing, and then when you win, you make up for all of it and go back up again. Right, that's the idea.
But this one, they're not doing zero day expiration. They're doing it for longer, right?
They're doing one DTE.
One DT. These are one DT. Okay, I see.
Correct. Yeah.
Okay. Well, this looks like it's, except for the last one, the rest of it has worked out. Last one is scary. But
Yeah, they definitely does get scary. But they also, this is a graph that they have where do you compound or not, right? Which means that do you increase the amount of contracts as your money grows or not? The blue dotted line means you are not increasing the amount of contracts as your account grows. Notice it went from 40 to 98.
Mhm.
That's still pretty damn good if you ask me. You know what I mean? 40,000 to 98,000 in a year, that's more than double.
Wow.
You know what I mean? And the drawdown is quite a bit less, right? The drawdown went from like 100K down to 80K. So it only had like a 20% drawdown. It wasn't that bad compared to this one, which is you compound and you keep increasing the number of contracts that you're using. Therefore, your loss is quite a bit larger, right? We're right now doing the non-compounded version of this. We're doing this blue line
Mhm.
is what we're currently doing. And the fact that we're not hitting the same type of line makes me think that we're missing something, right? There's something not going on properly here, right? That's why I'm rerunning this with a larger account because I think that the fact that I have to put a 1 here right now just because of the way our code works, but they would actually have a 0 here. They have 0. And it's not until you lose that you actually start getting invested, right? So that actually increases the probability that there aren't going to be that many days in a row of this, right? Now, if you're playing roulette, this doesn't make any sense. This is a very stupid thing to do for roulette because each spin is not correlated with each other. But theoretically, in the stock market, it's the opposite. That when you have something crazy happen one day, the next day, it's less likely to happen because the results actually are connected to each other, right? If you spin a roulette wheel, it's 50-50, right? It doesn't matter. Like if you lose a bunch of, like the chance of you losing a bunch of days in a row is very unlikely on the onset. But if you're at loss number 6 and now you're going for loss number 7, it's still 50-50, right? A lot of people think that's not the case, but if you actually study statistics, that is absolutely the truth, right? If you have lost 10 times in a row and you think loss number 11 is less likely, you are wrong. That is not the way that statistics works. However, with the stock market, I think that there's a difference there, right? Because In the stock market, if you've lost 10 times in a row, there's actually a very good chance that the market's getting exhausted and it could actually, that could stop it. You know what I mean? So that's the whole idea behind this, right?
That's true. Yeah.
Yeah.
That makes sense. Hmm.
Yeah. So I'm rerunning this on the SPY with this schedule, both a larger account, because I think this one that we put in the beginning was throwing us off.
So right now you're running with SPX, right?
Yes, this is on SPX. That's what this graph what is on. This is on the SPX. 22 delta. Oh shit, I gotta change it to 22 delta as well. Damn it. That's okay. I want to run both actually. 22 delta SPX with this schedule. This is the increasing schedule. Yeah, it was 025 1545. I think this is where we got it for the 25K account. I think that's specifically for a 25K account.
Is there any reason that you don't try to like cut your losses if it looks like it's going to lose the trade, you just put a stop order during the next day instead of letting it just go to maximum loss? Or you hoping that it might come back by the end of the day?
Yeah, I mean, that's just not the strategy. We could explore that as something to try.
Mhm.
Yeah, maybe it's a good idea. Maybe it can go against us, right? Maybe that actually ends up screwing us over. I don't know. We can test that. I'll be open to trying that. That's just not what the strategy was given when we started talking about it. But like, maybe that works. Maybe you're right. Yeah.
Stop losses can go either way. I don't like stop losses myself. I mean, if you pick the right, if you are a good stock picker when you start out, then you might as well let it go through ups and downs and take your chances, because stop losses sometimes you take that 50% too early and then it comes back. A lot of times, actually, there's a case against stop losses too. So I don't know, but that might be something you can test against not having it and see which one works better. So
Yeah. I definitely agree. I find it's funny. People so often say this. We'll look at a strategy and it has high drawdowns, and it's funny how often people will tell me like, "Well, why don't you just have a stop loss? Like that's gonna solve everything." Like a lot of times stop losses actually make it worse.
that's true. Yeah, I
Yeah.
agree. I agree.
Yeah. I'm glad that you know that because a lot of people they think differently. I've back tested enough times to know that, but most people they don't think that way. So I'm glad that you have that intuition. Yeah. Yeah, I agree too. Yeah, Avinash, thank you for the session. Yeah, no problem, Avinash, by the way. It's awesome. I'm glad you're enjoying it. I
Hey,
feel like I learn a ton from this all the time too. It goes both ways.
hey, Robert, I'm reading on the Sandbox account for paper trading for the trader.
Hmm.
It says that account activity is unavailable since this information is populated from our clearing firm. Streaming market data is unavailable due to exchange restrictions related to delayed data. So that's why we're not really seeing
Oh,
it.
so that's why we're not seeing trades.
Right.
Interesting. That kind of makes sense because in a way you can kind of get historical pricing data by doing that, right? Okay.
Yeah. So if
Interesting.
you're going to use the live account, I noticed the Sandbox account has account number and access token, but the
Yep.
production account only have an access token. So I guess you don't use the account number.
No, you do. Your account number is just in a different spot. It's in the top right-hand corner. It's like in the drop down. which is kind of weird. Like, I don't know why they don't put them next to each other like that, but you definitely still have an account number. It's just
Okay, so
in
you
different
use
spots.
account number, realtor is going to be paper or production, alive.
Yeah. Yeah. So use
Okay.
the account number and that key. And then you also have to set is paper to false.
Okay, I see.
Yeah. Yeah. If you're planning to use this martingale, just be warned that it does blow up every once in a while. So if that's something that you're looking into, but I think you know that. I mean, we talked about that, right? So
Yeah.
yeah. Yeah.
Well,
Maribel, I was sorry, go ahead.
if you hear the story of a Florida man anytime soon, then if the account blows up, then you know why you hear Florida man. So like that's a joke about a Florida man here in Florida. So you always hear a news story. It says Florida man breaks into house to pet cat. It's just crazy stories.
Yeah. There's definitely a lot of crazy news stories coming out of Florida. That's for damn sure. I don't know why, but
It's the humid weather.
I don't know. There's a lot. I guess Florida has unusually humid weather for the U.S.
They
And
get
New
hurric
York is humid as hell, but it's also cold most of the year.
Oh, they get hurricanes and all that stuff. So yeah.
Yeah.
And I hear all the land is in a swamp. So yeah, just takes a special kind out there, I think.
I don't know. I really like Florida personally. I wouldn't mind buying a place out there. Joe
Yeah, I got
Rogan.
a buddy. I got a buddy from Florida. He's always he's always sending me, look at this great land. It's so cheap. You should come out here.
Yeah, yeah, I agree. Problem is the insurance is crazy high. The land is cheap, but the insurance is very high, which makes sense if you think about the hurricane risk. But there's a funny story. If you ever listen to Joe Rogan about this, like the crazy stories out of Florida, he's like, he's like the amount of like crazy stuff going on in Florida, like um if you think about it, there's all these stories of like alligators show up on your front porch and like he's like, if you had to live next to like prehistoric dinosaurs that can like eat you as soon as you get out of your house, you'd be kind of crazy too. He says it's sort of story. But yeah, I love Florida personally. I'm a huge fan. I really would love to move out there. Yeah, Avinash says that too. Watch out for the crocodiles. Yeah.
Watch out for the Florida man.
Yeah.
I was thinking one thing you could do is run this in paper and then just wait to put real money in after it blows up. And then, it'll be less likely to blow up right after that. But then, of course, you don't know when it's going to happen again, but you might have a better chance of having a good run at that point. That's just, I don't know, one way to approach it. It's not a perfect solution, but it's something.
Well, I think we could do that with the schedule too. Like you're talking about the schedule, right? Like if that's kind of the idea here is that with the probability of it blowing up or losing so many times in a row is very low, right? So I think we could actually modify the schedule to kind of accommodate for that, right?
See what you're saying there, yes.
Yeah. So that's where the idea of skipping L1 comes from. You wait till
Right.
there's and of course you can vary that as much as you like, but then of course testing, and you just need to test them all. Of course, you can also run hyperparameter tuning. You can run machine learning to learn the model, and you can try all the possibilities. So that's actually kind of, again, like it's kind of working with this links, like, there's a variety of different libraries, and that's exactly the kind of stuff you can do with neural forecast.
That's pretty cool. I like that idea.
Perfect thing for machine learning would be to figure out when to the days that we shouldn't run. The days that are likely that we're gonna get those drawdowns.
Yeah, that's why I'm here. I'm
Yeah.
To figure that out, you're gonna make all of us are gonna be super millionaires.
Yeah.
Yes.
The only problem is options are too complicated for me. I'm just trying to so my top priority right now is I'm trying to come up with a pick the daily gainers long strat for swing trades.
But you don't have to do any options. You just gotta take this data and see those dates, what happened on those dates, and then figure out in the future how to avoid those dates, how to program so that we won't trade on those dates. That's all. You don't have to know anything about options. You just take this data and run your code on it and figure out how to go in the future when we are running it and not run the code on those dates without even knowing anything about options.
Yeah, I know. That's why I'm here working on neural forecast. Is
That'd be great. Yeah,
just the you know, the idea is to figure out whether whatever time scale you're working at, figuring out good entries and good exits. That's hopefully we can use these. You know, the time series forecasting models have been getting better and smarter. There's been a lot of improvements the last few years, so that's what I'm brushing up on here, trying to plug that into the LumiBot data and get us something that we can use for a lot of purposes.
excellent. Excellent.
Jim, by the way, I love the fact that you say options are too complicated. Meanwhile, you were a Google engineer working with AI, cutting edge models.
I'll tell you another funny thing.
Options are too complicated.
So I went back to school in 2009 to get a PhD, so I get a job as a research scientist, which I didn't know how to do, but I had dropped out without meaning to my undergrad, so I went back to I'll work on my undergrad and get that. And yeah, so I wound up in graduate school for computational linguistics, and of course I dropped out of the PhD program. I bailed out with my master's and got that job at Google. But people would say, well, what are you doing? I said, well, doing computational linguistics. And so many people would say exactly, wow, I don't know what that is, but it sounds complicated. And I would always laugh because, well, if it was hard, I wouldn't do it. So
options are definitely easier to machine learning. As as someone who's done both, machine learning is dramatically more complicated than options. Yeah,
I agree. Yeah, it's pretty tough machine learning.
Yeah,
I gave up on machine learning myself. Options I'm still doing. So that's
yeah. I think we all agree here. Options is much easier to learn than machine learning. So there's a couple of things here. So Asim says, how is the strategy pricing the option price? Is it bid or ask or the mid price? Asim, this is just placing market orders. So we're just placing market orders here. We're not actually even looking at bid, ask, or mid. So that's how it's placing in trade. It's placing in trade as market orders. In terms of, when we back test it, how do we know what price that got filled at? We're just looking at the closing price for that thing, right? Or, yeah, I think the fill comes at the closing price. Yeah. Yeah, and Latoya says, I thought the exact same thing as Robert. As much as I understand ML, you can understand options. Oh, yeah, 100% agree with that. It's also like, we already have the strategy here, so it's really just about, you don't need to know. You actually don't need to know anything about options. You just need to know, like, should you trade today or not, And Asim says, good, okay.
yeah, exactly. And there's also a long tradition, although I've been in some respects not respecting them and don't, been found a lot of fault with a lot of the ML guys who take exactly this position. But that's how we've made some of the greatest breakthroughs is, don't become an expert in the field, just crank on the math until it breaks. And we've had some huge breakthroughs this way. So yeah, like I say, I'm not saying I'm not helping with options. Like I say, I'm working on it. I'd say, but I don't think I'll ever get it. So that's, if I make money, I'm a very big pragmatist. The bottom line is where it counts.
Jim, I think if you start making a bunch of money with options, you'll learn it real quick.
Or I'll be blissfully ignorant. One other thing is the thing about learning stuff, like the man says, all of life is either loving or learning. Or as I used to say, it being a glass half empty kind of guy, experience is what you get when you don't get what you wanted.
Yeah.
So I'm not looking to learn, I'm looking to profit.
Yeah. Isn't that an Edison quote? Experience is what you get when you don't win.
That was my quote. I wasn't copying anybody as far as I knew, but I'm sure it's been said for many times for
I've heard that
thousands.
before, yeah.
Yeah, it's just true. It's been very ancient wisdom.
Yeah, absolutely. It's like Edison, the 100th time that he quote unquote failed making the light bulb, he says, you know, it's not that I failed again, it's just I learned another way that it doesn't work. You know what I mean? So
And another
It'll
thing
get you
is
there.
understanding it and profiting are different things. I have a hedge fund friend who ran into Myron Scholes at a party last year. Myron Scholes, as in the
Black Scholes.
Scholes option thing that he won the Nobel Prize for. And so he asked him, "So do you trade options?" And Myron Scholes said, "Well, I tried to, but I lost money, so I stopped."
Yeah,
The inventor of the Black Scholes model doesn't trade options for real.
Right.
That's crazy.
Hilarious.
That is surprising, actually. Wow.
Yeah.
Yeah, it makes sense, right? Like there's a difference between the theory and actually doing it in real life, right?
Yeah, for sure.
Yeah.
Well, you know, Thorpe invented the predecessor to Black Scholes and then didn't publish it, which is why he did not get the Nobel Prize. But he created a fund and he profited the heck out of it in the 60s and the 70s.
So there you go. Yeah, that's awesome.
That's how I got started on all this. I read Beat the Dealer when I was like 20.
Oh, that sounds cool. What is that about?
Well, he was the guy who cracked blackjack. Yeah, so it was a 19, I think it's early 60s, late 50s book. Anyhow, yeah, he's the one who figured out that blackjack, he invented card counting and that the players could have an edge. Although presumably there's some gamblers who had figured it out, although they didn't know the math. But yeah, he crunched the numbers and he's the one who figured out that you could beat blackjack.
Very
And
nice.
that's, yeah. And the next thing he did is he figured out this thing with commodities and options and stuff pricing.
Very nice. By the way, I don't know if you guys see this graph in front of me. This is an extraordinary looking graph.
Very
Holy
good.
shit.
Yeah.
Good.
What the hell?
What was different about this one?
Sorry, what was that?
Natural.
What was different about this one?
So I changed the parameters up. So here's the parameters. SPX, this is the quantities to trade. I don't know why it went 8, 128. I don't know where that came from. Yeah, these are the parameters. This is on a 14 delta. 8, 128. Why is it 8, 128? It actually multiplied things out way more than I wanted it to. It's not what I expected because 16 times 8. Okay, so it even took this and did 8 times. Maybe that's why our other ones are screwed up because it was actually multiplied. There's some sort of mechanism somewhere that's multiplying this. Where is that? There it is. This is what's creating that 8, 128. Okay, well, that's a bit of an accident, but
It worked
okay.
out, right?
It made a great result.
Good accident. But the first drawdown looks pretty bad though, right? Right
Yeah,
here.
first drawdown, I think that's a 30% drawdown. 28.68, I think specifically.
But other than that, the rest is good.
Yeah. And it's a 14 delta. So it's trading a lot of contracts on the 14 delta. I don't know. I wonder if they would actually let you trade that many contracts by the end of it. But the 14 delta actually makes a lot of sense. This also I did by accident. There's two things we did by accident here. But 14 delta and just trade in the SPX, right? And then here's another one. This is really high returns. Holy shit. 233% a year. I don't know. I would take that. 42% max loss. Wow, these are friggin' amazing. Holy crap.
Sharp. What's the sharp?
Sharp ratio is you take into account volatility and CAGR.
It's 1.48. That's not bad.
I don't really pay attention to that personally. I think it's kind of a useless metric personally. But the whole hedge fund industry uses it, so you know. But this is very interesting.
So what's the difference between the two, this one and the other one?
So this one's using a 14 delta. This one's using a 22 delta.
Oh, I see.
Yeah, so 22 makes more money, but blows up more. This one's using, it makes less money, but has a lower drawdown. Maybe we could even experiment with deltas in between the two. But this is a kind of loss that I would stomach. Like I wouldn't want to have more than like a 30% loss. Like that to me, like if I had a drawdown of like 80%, like I would not be very happy personally. You know what I mean? Like, but 30% I can handle. If we had a 30% dip and it came back pretty quickly, like personally, I would be able to handle that.
And how far do you have data for? Can you run 4 years?
Yeah, let's run over a longer time period. That's definitely a good thing to do. That is a great result.
That's
Yeah,
I,
Dave,
this
that,
is
wow.
this is awesome. Yeah.
Yeah, holy shit. I'll take it, man.
Yeah,
Jesus
if you
Christ.
run it for the whole 4 years and we don't see a huge drawdown, then yeah, this is the way to go.
Yeah,
I
yeah.
mean, does it require that much money? 200,000?
Well, I'm only running it with 100,000 because or 200,000 because and actually I want to get rid of this. This is parameters quantities. I'm gonna remove this code because this is sizing it differently. Actually no, I guess we don't need to remove it. I guess we can do a 25,000 then. Right? Like we can actually do that because we go 25,000 because it is sizing it appropriately. That's the schedule, right? 116, 40, da, da, da. My question is, I'm gonna remove that because that actually doesn't make sense. My question is, will it allow you to take that much margin? I don't know, like someone who's better at options, please calculate that. Would it allow you to put on 40 contracts or 120 contracts on the SPX? I guess we could actually test that. I could just go into Trader and see if it just lets me place it or not, right? But this is the schedule that would be for the 25K account because it automatically scaled it up. I didn't realize it, but it was doing that, right? It goes times 8, right? So it was 8 and then 128 and then whatever. It actually multiplied it out. So if we run the 25K, this is for a 25K account. Whether the broker will let us do this or not, I don't know. But this is pretty freaking impressive. 14 delta. Let's go back further. Like you guys are saying, let's go back to 2020. Run that. And then let's run the 22 delta as well. And then we could also run something in between, maybe like an 18 or a 20 or 16 even. You know, I'd be down to try a bunch of them. Python, options, or martingale, main. Right, so this is the 18 delta. We could try the 20 delta. This is really freaking impressive. I'll do the 16 delta. This, unfortunately, we're not going to get results on this call. I don't know about you guys, it's 12:30. I'm starting to get pretty tired. But I can run these and show you what the results were. But that's holy shit, that's pretty damn impressive, man.
Yeah, I agree.
Yeah.
I think we should run this on. If I put money on this, I'm not gonna run it on Trader. If I put money on this, I'm gonna run it on Interactive Broker.
I mean, yeah, it's your choice. I mean, just change the broker.
Yeah, I'm not gonna. I don't. Because well, we'll see. I mean, if you put your money in it, we'll see your results too. But I just what I've read about them, and I just don't feel comfortable anymore. What I know so far about them. So.
If I get a graph like this, I'm putting real money in.
Yeah, me too. No, I agree. I agree.
Holy
I mean,
shit.
it's worth the risk, and that 28%, I can handle that.
Yeah,
I mean, you
absolutely.
can wait a few days and it comes back, right?
Yeah, exactly. And it
So,
bounces
so
back pretty damn
who
fast.
cares?
Yeah.
Yeah, it's. I mean, and it gives you enough confidence that okay.
Yeah. The longest drawdown period is only 36 days. So basically what that means is if you put in your money today and you had the worst thing that happened, it would take 36 days before you got your money back.
Yeah.
Or at least historically that's what's happened. You know?
Yeah, Robert, that ×8 number, does that mean that instead of like a regular martingale where it just doubles each time, this is doing ×8 each time?
No, no, no.
Okay, all right.
No, what it's doing is it's sizing it based on your account size.
Oh, got it. Okay, okay.
Yeah,
Sorry.
so it's in the initialized method and it says, well, how big is your portfolio value? Divide it by 25,000 and multiply all the quantities by that.
Oh, okay, okay, okay.
Yeah,
I
so
didn't
it's just a sizing thing, you know?
get it. All right, thank you.
Yeah, no problem. Yeah, so it will automatically, so if you put in, 50,000, it'll size it towards that. If you put in, 100,000 or you put in 25,000, whatever you put in, it automatically sizes it, right?
Got it, got it.
Yeah. That's fascinating. I'm really interested to see the result. Oh, this one blew up. That's, I don't know what the delta was on that, but that one seems like
Hi, Robert. How are you?
doing good. How are you doing, Maribel? Haven't heard from you for a while.
Great, great.
Yeah.
Robert, I want to ask you something.
Yep.
You said that if you, with the $25,000, the people will get 122,000 in the month, 122 for 1 month? No.
No, this is 122 per year percent.
Oh, for the year.
So 25,000, I mean, again, this is historical results, right? But
Yeah.
25,000 should turn into, whatever 2.2. So 25,000 times 2.223, let's say. So 25,000 turn to 55,000 after the first year, but then there's a compounding effect. Keep that in mind. Then the next day, assuming this continues, we'll see what the 4 years,
Yeah.
right? Times
But you know,
2.22.
in the trading account, you have, if you want to trade every day and take the money like daily, you have to have 25,000 plus something because you have to keep in the account $25,000.
Yeah, so I'm still not entirely sure about that. I'm still kind of unclear whether
Yeah,
that.
because I talked to them about it.
Oh, you did? Okay.
Yeah, because I tried to do day trading, and they told me that I'm allowed only to do three times in 1 week, in
Yeah,
5 days.
so I'm not sure this is day trading, right? That's the question, is whether this is considered day trading or not.
I think that'd be day trading because they will be doing like taking money. They buy and sell, buy and sell, buy and sell. So
But
it
we're
will
not
be day.
though. We're not. We only buy once per day
Uh-huh.
and then we let it expire the next day.
Also, well, but how did you know? You sure it will expire the next
Yeah,
day, or they
that's the way
will?
it's set up. We've set it up to expire.
Oh,
That's what
okay,
this
because
does.
okay, okay.
Yeah, so
Then
it buys
yes.
at 3:45 and then holds it to the next day and lets it expire.
Oh,
So,
okay, okay. Then it's
yeah, so I don't know if that's a day trade, but
not a day trading. Day trading is when you buy it today and you sell it the same day.
exactly. Yeah, exactly. Which is not doing that, right? Although maybe the expirations
Day
consider that.
trading.
I don't know, right?
No, it's not doing day trading then
Yeah.
because I have buy like today and sell the next day, but it's not day trading.
Yeah.
Okay.
There's another question here. So Asim is saying, do you mind trying 0.1 delta? Yeah, let's try that out too. Well, why don't we try all of them? We'll try a bunch of them. 0.1 delta. Let's even do 0.12 delta, 0.12. Let's try all of them. Screw it. I have a fast enough computer. I could run all of them.
Ask what this delta means.
Delta is a measure for options. It's one of the option Greeks. So it basically says, if actually, okay, option Greeks in general kind of describe an option. So the delta measures the change in the price of the option versus the price in the underlying, right? So
Okay.
how much does this thing move
Mhm.
based on a $1 change in the underlying? That's what delta means. So it's like a
Mm-hmm.
measure on that specific option contract. There's also other ones you measure implied volatility, which is how much, how volatile people think that it's going to be. There's also gamma, which is a second order derivative of delta. There's like a bunch of other stuff that you could do. But delta is one of the option Greeks to
Okay.
basically describe this one option contract.
So in that case, like when you place an order, like how can you place an order based on delta?
So you have to look for it. So you basically, the way that this thing works is it will start off at the money and then go, okay, a strike price, let's say that at the money is 300. Okay, what is the delta there? That's usually 0.5. Okay, and go to 320. What's the delta there? Okay, delta is 0.3. Go to 340. What's the delta there? Okay, delta is 0.2. It just keeps going until it
Oh,
finds the point whatever delta,
I see.
then
Okay,
trades that contract. Yeah.
cool.
And this is the sum of the delta of all four legs, right?
Sorry?
It's sum of the deltas of all four legs. This delta.
No, we're looking at each individual leg. Right.
Each,
So we're
you have
specifically,
one delta only, right?
yeah, so we're looking for the 14 delta on the put side and then the 14 delta on the call side, which could be different. And then when we find those, we then buy, so that's what we sell, the deltas, and then we buy the next contract after that. Right. So wing size of in this case for SPX 5.
I see. Okay.
Yeah.
So the 14, okay, so the 12 delta for the put and the 12 delta for the call you sell. And then you buy the next, okay. I
Yeah.
got it. All right.
One more question regarding to the data set. If Polygon only, for example, if you, for example, if I only use the free package, only gives me like up to maybe 1 or 2 years of
Yes.
backtesting, then how about I use the Yahoo Finance data?
Yahoo Finance won't give you options data going back 2 years.
Oh,
Yeah.
right, right.
Yeah, this issue here. Options data has it actually has pretty good data in general, but it's only has minute data going back like a week, and then it has daily data going back, like hundreds of like 100 years in some cases. Uh,
Right.
but it's only daily data for stocks. They also have data for crypto, but we don't use that. If you want to integrate that into the package, you could into Lumibot. But they don't have options data historical like that. That's why we use Polygon.
Got you.
Yeah.
Thanks, Rob.
Yeah, no problem. Some other questions here. If you let it expire, are you accounting for the settlement price because the closing price doesn't necessarily mean the settlement price? Yeah, we do account for settlement because we look at the price of the underlying at that time and we account for, okay, this is what most likely would have settled at. So yes, when we do the back test, we do account for that. And movement in option price per dollar move in the underlying. Yeah, exactly. Avinash, okay, for every $1 move, option move 14 cents. Yeah, exactly. That's what delta is. Yeah. And TP says adios. Okay. All right. Okay. Some of these look like they exploded. This one blew up. I don't know what delta it used, but that one definitely exploded. I guess running it over COVID, right? So that's okay. You know what's really interesting is these guys, they were back testing, but they didn't back test over COVID, right? And I think that the 22 delta, personally, just based off of the back test that we're running, I actually think the 22 delta is way too aggressive. You know what I mean? I think if we were to do like the 14 or even like you guys are talking about the 10 or something like that, I think that makes a lot more sense. Because we're seeing this here. This one blew up. We're at negative 1.2 million, but this one's doing really well. right? This one went over COVID and worked out just fine, right? Yeah, this one is doing well. This one blew up, right? So it depends on the delta. So I actually think these guys at the SPX, I think their 22 delta idea is a bad idea. That's what I think. They're doing like 300% a year. They're doing very well. But I mean, you do that until it blows up, right? So I think it's really important to test all these different deltas and go through it. But this is remarkable. Honestly, this is the nicest looking backtesting graph I've ever seen in my life. I'm not gonna lie, I've never seen anything nicer than this before.
Yeah.
Yeah, me neither.
Yeah.
So we get a CSV file for the back test, right? So we should be able to easily see the days that have losses.
Yeah. Yeah.
Yeah.
You look
Now,
at
in the past,
stats.csv.
how many, how long are these, what is the distribution for all these loss sequences?
Mm-hmm. Yeah, I agree. You can get all that. You could do all this stuff, We just look at the file that ends in stats.csv. That'll give you all the information. Okay. All right, so I'm back testing this over a longer time period. We'll see how all these turn out. I'm actually very curious to see because this is running over COVID. This is like, I honestly, if it works over this 4-year time period, we get a very good result over this. It ran over COVID and all those types of things. And if we run this in paper trading, it actually functions properly, which I think it will because we've been running it with the other way. This is, I mean, I'd put real money into this, I'd be down for that.
But you should be able to run at least 15 years, right? With the Polygon data.
Maybe. Yeah, I don't know how far back it can go. There's also keep in mind there's also some discrepancies too, because when you go further back, we didn't have dailies on the SPX until like a year or two ago.
Oh.
So back then they were like Monday, Wednesday, Friday, whereas now they're every day. So there's slight differences when we go back that far. If we were to go back 15 years, I think they only had monthly expirations.
Mm-hmm.
So that's another factor as well, even if we could get the data.
Mm.
Yeah.
I think that probably 5 years is quite a bit of sample size, I guess.
I think 5 years is pretty good. It's you run over COVID. Like I would really want to run over like both good and bad times, right? COVID is a good example of an explosion, right? Things just blew up, right? 30% loss in a very short time frame, right? How did it do during that time period? How did it do in the bull market after that? How did it do in the bear market for 2 years after that? And how's it doing more recently?
Yes,
I
I
think
think
those are all very good time periods. If I did this over 4 years and saw a good backtesting result, I'd feel very confident in this personally.
true. Yeah. COVID actually, VIX I believe VIX has been maximum when COVID happened. That day that
Yeah.
was a big drop. That was the highest VIX. So that means that was the worst, basically, volatility.
Really, even higher than 2008?
Yeah, I think so.
Really? Wow.
Yes.
Oh, shit.
Because it was like all of a sudden was like everything that I shut down, right?
Yeah. Yeah, it's a very quick contraction, right? Like everything's shut down very fast,
The whole world was gonna shut down.
Yeah. Yeah. I remember that. I was trapped in my house in Toronto during that time. It was not fun. I really don't. If that happens again, I'm moving to Florida. I'm never going back to Toronto. I'll tell you that much.
All right.
Okay. All right. So I'm back testing these now. This is going to take a while to get this result. I'm seeing here an hour and 16 minutes. It's almost 1 o'clock in the morning where I am. I don't know about you guys, but I could use a little break and maybe a nap.
Yeah, you got me us too.
Yeah, yeah, exactly. But I feel like we accomplished some pretty amazing stuff today. This is I didn't expect to see things this nice,
Yeah, this
Maribel, you're in
was
Miami.
a
Yeah. Very nice.
surprise. This is very good.
Sorry, what was that, Ali?
I think this. I agree with you. This was a surprise. I didn't expect it either. This is very nice.
Yeah, I agree.
I mean, if the real money thing does this something like this, anybody should be able to handle this. I mean, I do 28% drawdown even in my trading sometimes. I mean,
Yeah, that's very normal.
once every couple of years, it can happen, and I can handle it. I don't have a problem with
Especially if it's this quick too. It's not even just a 28%.
Yeah.
You know, it's a fast 28%. This is at 36 days. You know what I mean? It's a very short drawdown period.
Yeah, it's not a big deal.
Yeah.
It's cool.
Yeah.
All right, thanks a lot, Rob. Really, yeah,
No
you're
problem.
right. This was a great experience to see all this stuff. So I appreciate it.
Yeah, Robert, where do you plan to publish the result of these back
I'm
tests?
going to put it up on Discord. I'm going to share the back tests on Discord. So I usually put them in our live Algo Hour channel.
Oh, okay, great,
Building
thanks.
sessions. Yeah, that's where I'll usually put them. Right. Cool. I'll let you guys know how it goes when the back tests are done in like an hour or so. We'll see how they turned out. We're trying some of these definitely blew up. But some of them are actually still doing quite well. Went from 25,000 is at 86,000 right now, 20% into it. That's pretty damn good, you know. This one blew up. This one's doing quite well. We're 20% into it. We're at 50K. So that's doubled in a year. So far, it's like 100% return. So some of these are doing quite well. So when they finish up, I'll post these in Discord. You guys can check them out. And then my personal course of action. Oh, look at this one. This one's at $1 million. What the hell? That's doing very well. Yeah, so I'm going to run these back tests. We'll see how it did over a longer time period. If this persists over a longer time period, we could pick the best delta. I'll take that. I'll run in our trading signals. I'll run in paper trading for a little bit and see how that goes. Right. And then if that actually works out well, I'm going to put some real money into this, and you guys I'll be the guinea pig. That's fine. But if it gets numbers like this, if I could double my money every year, sign me up. You know what I mean?
Yeah.
This code is available, right? We can use this code too, right?
Yeah, if you're part of the pro plan or all access plan, you get access to this code. Yeah.
Of course.
And let me push it up. So here is 1412. Latest results for SPX. Okay, so I'll push that up. I have it in a separate branch. Let me actually merge this into our main branch so it's easier for you guys to do. Great pull request. SPX. I'm confident merging it in now at this point. There you go. Okay, so that's available. If you want to pull this, you can do that right now. It's assuming you're for all access and you have access to our GitHub, you can get it. Right?
Yes. Super great. Thanks, Robert. Great evening.
Yeah, no problem. I agree. This is a lot of fun. I love times like this. It's great. Well, let's see how it does the longer back test. We'll see how it does paper trading, and then I'll show you guys what it does in live money.
Okay, get some rest.
Awesome. All right, thank you.
Okay, good night.
Have a good night, guys.
Thank you.